from Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
President Trump takes the shackles off NVIDIA. Welcome to the Tuesday edition as the White House allows NVIDIA to sell its H20 GPUs in China, sending the stock to a new all-time high. I'm Joe Matthew alongside Kaylee Lines in Washington. Thanks for joining us on Balance of Power. This coincides, Kaylee, with a series of investments in AI and energy that the president is making today in Pennsylvania. He's just on his way out of town now.
Yeah, and making some news as he departs Washington, specifically on something he teased earlier today, posting on True Social that there was a trade deal with Indonesia and that details will follow. He is now providing those details, Joe, as the U.S. will be imposing a 19% tariff on imported Indonesian goods. The president said the tariff on U.S. goods going into Indonesia will be 0%.
Interesting way to transmit this information as opposed to a piece of paper. The president right now is talking with reporters in the driveway of the White House on his way out, so we'll let you know more as we learn it. But yeah, redhead on the terminal, 19% Indonesia. I guess we have another box to check, which leaves 70 some odd others.
Yeah, roughly.
Maybe
and
more
we
than
should
that.
keep in mind as well that Indonesia was on the receiving end of one of the letters from the president last week, and the tariff rate set out in that letter was 32%. So this is lower, though 19% is still nothing to sneeze at. So this is a story we will follow, not just on Indonesia, but when we consider the trade landscape and the export controls landscape more broadly when it comes to China. We'll have Anna Ashton joining us shortly.
Anna Ashton and our scoop machine. Mike Shepard will be with us as well. Remarkable turn here for NVIDIA and AMD, we should know. We'll look at the stocks and check out what this means for these two companies.
Yeah, we'll look at them, and Charlie Pellet's probably looking at them too. So let's get a check on those stocks and markets overall with Charlie up in New York. How's it going?
Thank you very much. Here's what's going on. Both higher right now. We've got NVIDIA up by 4.1%. Advanced Micro Devices surging 6.3%. One of a number of major stories that we are following for you. Right now, CPI Tuesday, we have got the S&P 500 index retreating. That stock rally sputtering as bond traders trim their Fed bets. Also, the 30-year, 5.01%. But right to the equity markets, S&P down 13, 62.55, retreating from a record down 0.2%. The Dow down 367 now, down by about 0.8%. Nasdaq Composite Index up 102 points, up 0.5%. Our Mag 7 Index, of which NVIDIA, of course, a part, up 0.8%. The 10-year, 4.47%. The 2-year, 3.95%. And again, that 30-year bears repeating, 5.01%. Gold lower by 0.5%, 33.28 the ounce. West Texas Intermediate crude now down 1.1%, 66.27 the barrel. And Bitcoin now down by 2.4%, 117,303 on Bitcoin. Earnings news this morning from big banks. Another big story that we're watching. J.P. Morgan Chase down 0.8% after earnings. Citigroup up 2.9% after earnings, and Wells Fargo after earnings now down by 5.7%. So again, recapping, S&P lower by 12, down 0.2%. And as we have been reporting, as you heard from Joe and Kaylee, President Trump to impose a 19% tariff on Indonesian goods. And Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lines.
All right, Charlie Pellet checking out markets on the move and stocks on the move, including NVIDIA, as Charlie mentioned, up more than 4% as we've gotten news that NVIDIA is going to be able to start selling at least certain chips in China again, specifically the H20 chip, which, of course, from the jump was designed to work around what were existing export controls that the U.S. had put into place in order to restrain China's ability to access advanced semiconductors. This is something that had been tightened, though, and now it's getting loosened back. And Joe, it's quite a reversal, and noteworthy that the reversal comes that NVIDIA is going to be granted licenses to sell these chips once more after Jensen Huang has been spending some time with President Trump as of late, including at the White House last week.
Yeah, he sure was, and you wonder exactly what was said in that conversation to turn fortunes not only for NVIDIA, but its rival AMD, whose MI308 chips will also be apparently allowed for sale in China, which is why we're seeing both of these stocks jump on an otherwise kind of blah day on the markets. Mike Shepard's a big reason why we know about this, and he's been very close to this whole story for weeks now and joins us now in Washington. Mike, you're the one who broke the news that Jensen Huang was at the White House. Was it as simple as sitting down with Donald Trump?
It really is a question of him meeting with the president again. And it's not his first sit-down face-to-face with the president at the White House, but in a sense, it's the most consequential. Jensen Huang has really been railing against these increasingly tight export restrictions aimed primarily at his chips. And it's not designed to hurt his company, but it ends up doing so. The idea is to prevent this technology, which has potential dual use. The idea is that you want to keep advanced semiconductors out of China's hands. So the argument goes among China hawks here in Washington to prevent China from deploying it in its military or national security apparatus. But for Jensen Huang, this imposes a big cost on the company and on its bottom line. In the first quarter of this year, they reported a $4.5 billion write-down just from those H-20 restrictions. And for this coming quarter, they were looking at possibly $8 billion in lost sales. So there is a consequence there. And this was an important meeting he had with the president.
Well, so talk to us more about the actual capacity of this chip, what it could allow China to do, because I can't imagine many China hawks are super thrilled with this decision.
The early sense that we get is that no, the China hawks are not happy at all with this, but it remains unclear just how forceful they will be in trying to push back against this, Kelly. And when you hear from U.S. officials, and we spoke with David Sachs, the White House AI czar, earlier today on the Bloomberg Tech Show with Ed Ludlow, and Howard Lutnick on another network, they each were pointing out that, look, this H-20 chip is a few generations behind now the latest that NVIDIA has to offer. And it is on par with perhaps the best that Huawei, NVIDIA's chief rival, is trying to offer now within China. The idea is this, if you talk to Jensen Huang, that you want American technology to be sold around the world. But if the U.S. is not selling it to China, which is the world's largest semiconductor market right now, you allow Huawei free reign potentially there. And that gives Huawei perhaps a springboard to start selling into some other markets. And that's a risk for NVIDIA.
You know, we talk about computer chips. People think about Intel inside, these microchips. These are massive. These GPUs are hardware stacks that require proprietary software to run them. You were talking about this H-20. It weighs about 70 pounds, Mike. You've held them with
heavy.
your own hands. Can you stack enough of these to replicate the effectiveness, for instance, of a Blackwell? Is that what a China hawk would suggest?
What they would suggest that there are ways to stack these and put it together and run inference learning for AI models to gain ground. And maybe you don't need the perfect when it comes to these AI accelerator chips, but even if you have something pretty good, you're handing something to China that, in the U.S. view, especially among some in the national security establishment, that is not something you want to be giving, our top geopolitical rival here.
Wow.
All right. Mike Shepard, Senior Editor for Technology and Strategic Industries for us here at Bloomberg. Thank you, as always, for joining us on this important and market-moving story. And it's such an important story. It's one that our colleagues on Bloomberg Surveillance had the chance to speak with the Treasury Secretary, Scott Bessent, about earlier today, talking about chip manufacturing, yes, but also how it fits into the wider picture in ongoing trade conversations with China. Here's what he said.
I can tell you the one thing that we do not want is a digital Belt and Road springing up around the world because other countries or China are substituting for our American chip manufacturers.
This is the same chip, though, that the Trump administration blocked with export controls in April. So why the change in policy now? Anne-Marie,
you might say that that was a negotiating chip that we used in Geneva and in London.
So this was part of the trade talks when it comes to Washington and Beijing?
Yes.
Was it a quid pro quo then? As you said, it wasn't, but was it potentially to make sure that you can get the licenses when it comes to rare earths?
Yeah, I think it was all part of a mosaic. They had things we wanted, we had things they wanted, and we're in a very good place. I expect to meet my Chinese counterpart, the vice premier, in the next few weeks.
So when and where will that meeting take place?
We're still working on that. The Chinese leadership has a big conclave at the beginning of August, so we're trying to work out whether that could be in a third country before or after that conclave.
Will the administration release the framework of the Geneva and London talks?
Well, we have released some of it, and I'll tell you that now, having settled on tariffs, on the export controls, we can move on to the next stage of talks. And I think it's very important, both for the global economy, for the U.S. economy, and for the Chinese economy, for us to move on and talk about China opening its markets and the increased domestic and consumer production there.
Are you hoping to get to that next phase before August 12th, when that's currently the détente between these two economies?
Yeah, I think we're in a very good place, and I tell market participants not to worry about August 12th.
With the Treasury Secretary Scott Bessent, our colleagues on Bloomberg Surveillance. When you add that to what we just learned from Mike Shepard, we want to talk about all of this with Anna Ashton, the founder of Ashton Analytics, a specialist in U.S.-China trade, which is why we bring her on so often, former China analyst with the Department of Defense. Anna, it's great to have you. Welcome back to Bloomberg TV and radio. I'm wondering your thoughts on this about face when it comes to chips from NVIDIA and AMD. Is this in the best national security interest of America?
Well, I think it's important to note that not only are these not the only things that the Trump administration has recently rolled back in terms of export restrictions, but all of the things that they've rolled back so far are things that they themselves imposed this spring, either in April or in May. So when Treasury Secretary Bessent indicates that these were, chips that were part of the London negotiations, I take that at face value. They imposed more restrictions on exports of certain goods that they believed to be strategic for China in order to have bargaining power to try to get China to speed up its exports of rare earths.
Well, so when you talk about the walkbacks we've seen from this administration on various fronts when it comes to China, how much of a dovish turn would you characterize it as, Anna? And if it is indeed a dovish turn, how upset do you think China hawks in and around the administration and elsewhere are about these moves?
Well, look, I definitely think that China hawks are going to be upset, regardless of whether the rollbacks are of restrictions that were imposed recently by the Trump administration or of previously imposed restrictions, because from a China hawk perspective, none of this technology should be going to China at all. But I also think that in terms of trying to measure whether or not this is a dovish turn by the Trump administration, we still have to wait and see. Because at the end of the day, this will only be a truly substantive change in U.S. policy towards China when it comes to export controls and access to critical U.S. technologies if we see a rollback in Biden-era export controls. I certainly think that that is something that China wants. And it may be, it's possible China will get something like that. Because we know that rare earths exports the licensing approvals have picked up, and there's some evidence to indicate that shipments are beginning to flow more smoothly. But certainly there's no approval of anything to go to military end users, for example. Things could always be faster than they already are, and they're not as fast as they were prior to these restrictions on exports of Chinese rare earths and magnets being imposed. So we'll have to see whether or not the Trump administration is willing to give ground on any Biden-era policies.
Well, do you worry more about the next DeepSeek emerging, or do you go back to your role at the Department of Defense and worry about what China might do with this technology when it comes to building weapons?
I think that whether or not China gets this technology from the U.S., I think that this buys China time to continue developing indigenous technologies without losing the ability to apply these technologies in various ways that are important for them in the near term. But China has been throwing enormous amounts of money towards indigenous development of its own technologies so that it won't have to rely on the United States anymore. It's been doing that for a number of years now, and it's been doubling and tripling down on that. I think it's only a matter of time before China doesn't need U.S. technologies in order to accomplish the various ends that it's trying to accomplish, and so that's happening regardless.
Well, speaking of matters of time, Anna, we just heard from the Treasury Secretary moments ago suggesting that August 12th should not be viewed by market participants as a deadline they should be worried about. Does that suggest to you that there is a lack of forward progress in reaching more of a trade agreement between the U.S. and China? Should we consider any of these deadlines to be real at this point?
Super fair question. It does suggest to me that they have yet to make it past serious discussion, or make it to serious discussion of things beyond rare earths. I feel like rare earths has been the hair on fire crisis for the Trump administration, particularly because of the heavy rare earth magnets that are so important not only to electric vehicles, but also to traditional combustion engine vehicles and to so many electronics. And I think that, that will continue to be something that China can use as leverage to get the U.S. to the table. And until that is satisfactorily resolved in the U.S. mind, it will be hard to move forward on negotiation of other issues. I think it is worth noting that a couple of key heavy rare earths that are used in these magnets that have been in short supply, like dysprosium, for example, and neodymium. Those also are not, they're primarily sourced from Myanmar, and the state in Myanmar that they're primarily sourced from has been incredibly unstable due to domestic conflict for the past six to 8 months. And China itself is having a hard time getting these things. So it's just worth keeping in mind that China is not necessarily simply using these rare earth export licensing restrictions to gain leverage vis-a-vis the U.S. It is also thinking about its own supply security, and that may limit how much it can negotiate.
Do you want to see President Trump, President Xi in the same room? Do you want to see a summit? And is that, in fact, where the president might be most likely to give up the ghost on this and lower export controls, to your point, from the Biden administration?
From the perspective of somebody who would like to see a more functional and healthy U.S.-China relationship, that sounds like a really nice thing. When I'm thinking about it in terms of strict U.S. interests, there are things that could certainly be gained there. If I put on my China hawk hat and look at it through the lens of security concerns, these are really difficult trade-offs. And a meeting that caused President Trump to relax export controls, bigger, more fundamental export controls on advanced technologies to China might not be in the U.S. interest.
Anna, we learned from President Trump yesterday that if no ceasefire agreement is reached between Russia and Ukraine within 50 days, that he will look to impose 100% what he described as secondary tariffs on countries that help Russia, including big buyers of Russian oil. Read China. How do you expect Beijing would respond if indeed something like that were implemented? Would their behavior be, okay, we're going to stop buying cheap Russian crude and exports, or we're going to potentially retaliate against the U.S. with tariffs in kind?
China certainly can't stop buying Russian crude or gas. And that's because it gets an even bigger percentage from Russia than it did before the Ukraine war started. And it's pretty heavily reliant on Russia. Russia's one of its main suppliers. So that's not in the cards. What is potentially in the cards is use of smaller companies instead of their main oil and gas companies, which is already to a large extent the case, to move that oil and gas and therefore sort of shield China's broader economy from any secondary sanctions that are imposed. If the secondary sanctions don't hit the big banks that are, if the big banks aren't processing these transactions, then, China can kind of prevent calamity from ensuing as a result of the sanctions. And we've seen them do that with their purchases from Iran as well. That's what I would expect that to be their first move.
Well, so Anna, if I read you correctly, if China's not going to be able to actually adjust its purchases of Russian oil, would that mean that these secondary sanctions, tariffs, whatever you want to call them, would not have the intended effect the president wants here, which is to put the squeeze on the Russian economy and stop them from being able to fund their war machine?
I don't think that they would have the intended effect, because I think that, other countries that are buying from Russia might not have the same safeguards in place to protect them from secondary sanctions, but China certainly has safeguards in place, and China is the biggest buyer. So, I think that we've been learning the hard way for a few years now that there are limits to the power of U.S. sanctions, and they don't always achieve what we hope that they will achieve. And I don't think that secondary sanctions on all sales of Russian oil are necessarily going to achieve what Trump wants.
All right, Anna, we appreciate you joining us. As always, Anna Ashton is founder of Ashton Analytics, a specialist in U.S.-China trade and economics, of course, a former China analyst at the Department of Defense, here with us on Bloomberg TV and radio. And as we discussed with Anna, the threat of secondary sanctions and the deadline Russia is now facing down, perhaps that deadline too, Joe, is a little bit squishy, as the president suggested to reporters that it could be sooner than 50 days for the Russia deadline.
Deadlines. We remember there was a 2-week deadline, I think, for Iran, and strikes took
Yes.
place only days into that period of time. So it might be a case of as many as 50 days when it comes to this administration.
Yeah, so that headline and others we've gotten from President Trump as he spoke with reporters upon departure from the White House. We are expecting to get some tape rolled back on his remarks. We'll, of course, bring that to you here on Bloomberg TV and radio when they begin. But we also want to check in on financial markets on this CPI day. So for that, we turn to Charlie Pellet, who has a look from New York. Hey, Charlie.
Hi, thank you very much. CPI day today, PPI tomorrow, and right now we are trading at just about the lows of the session. Right to the numbers here. Relatively tame inflation data failing to ease Wall Street's worries about the impact of tariffs. The S&P now lower by 12, 62.56, down 0.2% as of now. Worth pointing out, though, that briefly during this morning's session, we did trade as high as 6,300 on the S&P. The Dow now down 357, down 0.8%. NASDAQ Composite Index, though, on the China chip news, up 96 points, up 0.5%. NVIDIA up 4%. Advanced Micro Devices up now by just about 6.1%. 10-year 4.48%. The 2-year 3.95%. The 30-year back above 5%, 5.01%. Gold down $12 the ounce, 33.31, down 0.4%. West Texas Intermediate crude down 0.9%, 66.38 a barrel. And Bitcoin now down 2.4%, 117,310 on Bitcoin. So again, stocks lower. NVIDIA and Advanced Micro Devices plan to resume sales of some AI chips in China after securing Washington's assurances that such shipments will get approved. Shares of both companies and other chip makers higher. NVIDIA up 4.1%. Advanced Micro Devices up 6.1%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And back we go to Washington. Once again, your hosts, Joe Matthew and Haley Lyons.
All right, Charlie, many thanks. Charlie Pellet, live from New York, watching Wall Street for us, and we'll get another check on the markets a short time from now as we follow President Trump in his travels. He's just left the White House, and we do expect to be hearing from the president. Some tape coming from a conversation he had with reporters on his way to Marine One, which just touched down at Joint Base Andrews. The president on his way to Pennsylvania, Kaylee, to talk about AI and energy, a series of investments that will be announced a little bit later on today. Of course, he also, before he left town, wished everyone a happy crypto week and called on all Republicans, in all caps, on Truth Social to vote yes for the Genius Act and the Clarity Act.
Indeed. And of course, there's a third piece of legislation that's going to be considered as well, that anti-CBDC bill, essentially. The three of them together comprising Crypto Week. The question is, can all three of them actually pass in the House of Representatives and then in the Senate for those that hadn't originated in the lower chamber? So we want to get a look at that now as we turn to Republican Congressman Mike Flood, who is with us. He, of course, represents Nebraska, its 1st District, and is a member of the House Financial Services Committee, in addition to being vice chair of the Republican Main Street Partnership. Congressman, thank you for being here. Of course, the Genius Act, the stablecoin legislation, passed the Senate. It does seem there's a lot of optimism that you will be able to pass that in the House. But what about the Clarity Act, the market structure bill? Are you as optimistic about its fate?
I really am. You know, Patrick McHenry, when he was chair, worked hand in glove with French Hill on digital assets. Our chairman now, French, is taking this to the next level. Listen, the House has been a leader in this space. We know what we're doing. We have been at this for several years. The Clarity Act will pass. In fact, last year when we did market structure in the House of Representatives, I think we got about 71 Democrats. So I don't know if we'll get that many this time, but this is a bipartisan piece of legislation that meets with the favor of a great majority of folks in both chambers. And I'm confident that Crypto Week will be a success, and we will finally have a bill signed into law on stablecoins. Now we have to urge the Senate, after we pass the Clarity Act, to do the same in the upper chamber so we can move this forward.
How do you close the deal on that, Congressman? And welcome back. It's good to have you on Bloomberg. The Genius Act is one thing, but indeed the Clarity Act appears to be something different. And if you need Democrats to make this happen, a lot of them say that they'd like to see language that removes President Trump and his family from crypto investments. That appears to be the cause of the allergy that many Democrats have here. Would that help it get done? Is that possible?
I'm sure that's what they're asking for. I know that French Hill, our chairman, has been working with Senator Scott in the Senate. Listen, we're about anything that gets us over the line. I'm hopeful that the Senate will prioritize market structure like we have in the House, because yes, it is a win to have stablecoins, but you can't have one without the other. There's no clarity. The reason we named that bill that is right now under Gary Gensler, when he was in charge of the SEC, he thought everything was a security. The CFTC obviously should have authority over Bitcoin. We have to pick a lane, know where you're going, and that's why the Clarity Act getting done this year will send the signal to every other country in the world that the United States will remain the world's reserve currency with the dollar, and transactions in Africa, transactions in South America, they will be built on the strength of the dollar, and that's why we're so about getting this done in a quick manner.
Congressman Mike Flood, Republican, with us here representing Nebraska's 1st District. Congressman, it's great to have you, and I hope we'll have more time when you join us next. The president is just now speaking from the White House driveway, and we want to bring this conversation to our viewers and listeners. Let's go to the White House now. Listen to Donald Trump.
Well, we have school choice, and we're getting school choice approved all over the country. We just got it done in Texas, and school choice is the answer. Yes.
Yes, Mr. President. You've given Russia 50 days. What happens now? Do you talk to Vladimir Putin?
Well, at the end of 50 days, if we don't have a deal, it's going to be too bad.
Should Zelensky get more aggressive?
Yeah, the tariffs are going to go on, and other sanctions go on.
Should Zelensky target Moscow? Should Zelensky target Moscow, sir? Should Zelensky target Moscow or deeper into Russia?
No, he shouldn't target Moscow.
Is that why you gave him more weapons, though?
No, we're not looking to do that.
Mr. President, why are you giving Mr. Putin the additional days not to do this war again?
Oh, I don't think 50 days is very long, and it could be sooner than that. I don't think 50 days is very long.
Mr. President,
you should have asked that same question to Biden. Why did he get us into this war? You should ask that question. Yeah, and what did he tell you? Why did he get us into this war? You know why he got us in? Because he's a dummy, that's why, and you don't cover it right. But you should be asking that question to Biden. Why did he get us into this war? Because he's incompetent. It would have never happened if I were president. So we made a deal with Indonesia. I spoke to their really great president, very popular, very strong, smart. And we made the deal. We have full access to Indonesia, everything. As you know, Indonesia is very strong on copper. But we have full access to everything. We will pay no tariffs. So they are giving us access into Indonesia, which we never had. That's probably the biggest part of the deal. And the other part is they are going to pay 19%, and we are going to pay nothing. I think it's a good deal for both parties. But we will have full access into Indonesia. And we have a couple of those deals that are going to be announced. India basically is working along that same line. We're going to have access into India. And you have to understand, we had no access into any of these countries. Our people couldn't go in. And now we're getting access because of what we're doing with the tariffs. So they're paying 19%, and we are not paying anything. And they're going to give us full access into Indonesia. Now, Indonesia has some great product, and they also have some very valuable earths and various other materials. One of the things, as you know, they're known for is very high-quality copper, which we'll be using.
Mr. President, on Texas, sir.
Do you believe your tariffs might have led for inflation to increase last month? Do you think they had any role?
Well, we had very little inflation. I don't know. Who do you work for?
USA Today.
What?
USA Today.
Oh, well, they wrote me a beautiful article the other day, so I can't get angry at you. USA Today just wrote a very good article about me. What's that all about? So I can't get angry at you.
On Texas, sir.
No, there was very little inflation, as you know. The numbers were very good, very much inside the margin. So we've had no inflation. All we have is we're making a fortune. We are taking in hundreds of billions of dollars. You saw we had a surplus of $25 billion last month, which we haven't had in many, many years.
Mr. President, sir, on Texas.
Mr. President.
We are doing because I'm able to do it. Nobody else would be able to do it. We have tariffs going on because we want tariffs and we want the money coming into the United States. But more important than the money, there's two aspects to tariff. There's the money, which comes in. The other aspect is that rather than paying the tariffs, the country or the company will build in the United States, make their product in the United States, and that creates jobs. And I would say of the two, probably the more important to me is that. Yeah.
Sir, on Texas.
Are you on Ukraine's side now?
No, I'm on nobody's side. I'm the no.
Why?
I want to. You know what the side I'm on? Humanity's side. I want to stop the killing of thousands of people a week. I want to stop the killing. I want the killing to stop in the Ukraine-Russia war. That's the side I'm on.
Mr. President, your daughter-in-law said that there should be transparency in the Epstein case. Do you agree with her, sir?
The Attorney General's handled that very well. She's really done a very good job, and I think that when you look at it, you'll understand that. I would like to see that also, but I think the Attorney General, the credibility is very important, and you want credible evidence for something like that. And I think the Attorney General's handled it very well.
How many more seats?
The Attorney General briefed you on the DOJ and FBI review, the findings of that review. The Attorney General briefed you on
that.
What?
On
the DOJ and FBI
On what?
review.
On what subject?
Epstein. Okay. On Epstein, of the review of the files. Attorney General Pam Bondi.
A very quick briefing.
Did she tell you, what did she tell you about the review? And specifically, did she tell you at all that your name appeared in the file?
No, she's given us just a very quick briefing, and in terms of the credibility of the different things that they've seen. And I would say that, these files were made up by Comey, they were made up by Obama, they were made up by the Biden, we went through years of that with the Russia hoax, with all of the different things that we had to go through. We've gone through years of it, but she's handled it very well. And it's going to be up to her. Whatever she thinks is credible, she should release. Yeah.
Sir, on Texas, how many more seats do you want the Republicans to draw?
5.
And then what if California, New York, Illinois, and other blue states
decide to do this? Yeah, well, that's okay too. But 5, I think we get 5, and there could be some other states. We're going to get another 3 or 4 or 5 in addition. Texas would be the biggest one, and
so
that'll be fine.
Are you calling in for a complete redrawing of the congressional map ahead of next year?
Just a very simple redrawing. We pick up 5 seats. But we have a couple of other states where we'll pick up seats also.
What's your tariff rate for the EU?
Well, when he was in my office. I told him he's doing a very bad job. He's way late. That's why I call him too late. Jerome Powell is too late. He's way late. Interest rates should be coming down. We have a very, very successful country. We should have the lowest interest rate anywhere in the world, and we don't. Jerome Powell has done a terrible job, and frankly, I don't think he could do a worse job. He's called everything wrong. So they had a report come out the other day, 71 different economists, and me. You know who was right? Me.
Mr. President.
Did you know that? I was right. You must be kidding.
Mr. President, what are your thoughts on Andrew Cuomo?
You had to waste a question like No, we are talking to the EU, and we're making progress. But look, you know, we already have a deal with the EU. It's called the letter that was sent out. I think it was 30%. That's the EU, but we, at the same time, we are talking.
Andrew Cuomo.
No, go ahead.
Well, Mr. President, your reaction to Andrew Cuomo staying in the New York City mayor's race. Andrew Cuomo staying in the New York City mayor's race.
I think he should stay. I think he has a shot.
Would you prefer him over...
Well, I don't want to say. You know, I'm a Republican. He's a Democrat or an independent. No, I think Andrew would have a good shot of winning. He's got to run a tough campaign. He's running against the communists. I would think that he would have a good shot of winning.
Tell us about your trip to Scotland, sir. What are you going to do on your trip to Scotland?
We're going to be meeting with the British Prime Minister, very respected, and we are going to have a meeting with him probably in Aberdeen, and we're going to do a lot of different things, and we're going to also refine the trade deal that we've made. So we'll be meeting mostly with the, at probably one of my properties, or maybe not, depending on what happens, but we'll be in Aberdeen in Scotland, meeting with the Prime Minister.
Mr. President, what's your preferred?
Mr. President, give a message for the EU if they retaliate to the tariffs?
Well, I don't know how they can retaliate. You know, they've made a lot of money. They've treated us very badly, but now they're treating us very nicely. And I think we'll end up, I think everybody's going to be happy with the EU.
What's your preferred target?
Given that the
President.
Sir, any plans to meet with Pope Leo in the near future, sir?
Not a plan. I would do it. I have a lot of respect. I really like his brother. His brother is a major, serious Trumper. You know that. He's MAGA all the way. I like the Pope's brother, and I think I'd like the Pope. But the Pope's brother lives in Florida. I met him, and he is MAGA. He's got MAGA signs all over the house. He likes Trump, and I like him.
Mr. President, what's the latest on Iran?
How about you?
Iran.
Well, we're going to see what happens with President Putin. So far, I've been very disappointed with President Putin. I've solved a lot of wars in the last 3 months, but I haven't gotten this one yet. This is a Biden war. It's not a Trump war. I'm here to try and get us out of that mess.
Mr. President.
Any messages for what? Yeah, go ahead. Do I have a what? For the people of Brazil? Are you from Brazil? He's going to trial now, right?
Yeah.
When is that trial starting? When is the trial for Bolsonaro starting? When is it? How is it going?
Now they're asking him to find him guilty.
But they haven't found him guilty, have they?
But what do you think?
But have they found him guilty? No.
On Iran.
President Bolsonaro is a good man. I've gotten to know a lot of prime ministers and presidents and kings and queens. And I know him, and I'm pretty good at this. President Bolsonaro is not a dishonest man. He loves the people of Brazil. He fought hard for the people of Brazil. He negotiated trade deals against me for the people of Brazil, and he was very tough. And he was tough because he wanted to do a good deal for his country. He was not a dishonest man. And I believe it's a witch hunt, and it shouldn't be happening. And it's not that I know him that, look, he's not like a friend of mine. He's somebody that I know. And I know him as a representative of millions of people, Brazilians. They're great people. And he loves the country, and he fought hard for those people, and they want to put him in jail. And I think that's a witch hunt, and I think it's very unfortunate. And nobody's happy with what Brazil is doing, because Bolsonaro was a respected president. Very respected.
Mr. President.
We want Adam Schiff brought to justice.
I would love to see him brought to justice. I'll tell you what, I think Adam Schiff is one of the lowest of the low. I would love to see him brought to justice. He's a dishonest, crooked guy. I don't know about the individual charge, if that even happens. But Adam Schiff is a serious lowlife.
And tomorrow morning here in Washington, AOC is hosting.
Yeah, Adam Schiff.
For breakfast.
Adam Schiff, I believe.
Sorry. I'd love to be. I'd really love to go. I mean, I look forward to meeting them both. I know them both very well through what I read and through what I see. Look, he's a communist. I don't think our country is ready for a communist, but we're going to see. And I don't think that race is over yet either. You do have a couple of people running against, and it'll be an interesting thing. Things are coming out about him which aren't good. And, AOC, look, I think she's very nice, but she's very low IQ. And we really don't need low IQ. Between her and Crockett, we're going to give them both an IQ test to see who comes out best. Now, I took my test. I took a real test at Walter Reed Medical Center, and I aced it. I got every one of all those questions right. Now it's time for them to take a test. Anyway, have a good time. I like Dan Bongino, yeah.
Mr. President, do you think Putin respects you and takes your threat seriously?
I guess that's it.
Indeed.
He's on his way to the chopper.
Yep, President Trump having a wide-ranging conversation with reporters as he departed the White House en route to Pittsburgh, of course, for an AI summit that is taking place. We'll be hearing from him more at that summit later, but covering a lot of territory there, Joe, from the ongoing war between Russia and Ukraine, suggesting that the actual deadline Russia may be facing before the implementation of secondary sanctions could be shorter than 50 days. And, of course, also providing some clarity on the trade front when it comes to Indonesia, suggesting Indonesia is going to face a 19% tariff on its imports into the United States, while the United States will face no tariff on its exports to Indonesia.
A good deal, I suppose, for the United States. I don't know if we've heard from Indonesia on this. There's been no paper on it. It seems to be an interesting way to roll out a major trade deal in the driveway of the White House. But let's get into it with Anna Wong, who is with us now, of course, Bloomberg Economics chief U.S. economist. Anna, 19% Indonesia, assuming that this is confirmed, means what for our trade relationship?
Well, I think it means that the aggregate tariffs would go down a little bit, but I think generally it doesn't really. It's just a drop in the water. Yeah. The main trading partners who we really want a trade deal with is really Japan, EU, China, Canada, Mexico, and those are really the ones that will make a dent on the aggregate tariffs and inflation ultimately.
Well, the president did talk about the EU, saying that we're making progress with Europe, but we already have the letter, knowing that he's suggested that these letters in and of themselves are deals, which would suggest a 30% tariff on the EU, which he's threatened for August 1st. The question, though, Anna, is to what extent tariffs already, not just the ones that are threatened, but the ones that are in place, are feeding through the U.S. economy. When we look at what was once again a more muted print on CPI, at least on the headline, it would suggest that not yet. But talk us through what's actually going on underneath and whether or not we actually may be seeing more tariff effect than meets the eye.
Yes, so today's CPI is the fourth straight soft report. However, in the details, it shows a much brisker pace of tariff pass-through. In fact, I think market participants all pretty much agree that this is the first real tariff print of the CPI print that's littered with tariff effects. Appliances, washing machines, clothing, men's clothing, women's dresses, everything, audio equipment. You could see a pretty broad-based tariff effect. However, at the same time, hotels costs went down, and shelter costs went down, and as a result, the overall print is not as high as it would be. So I think the takeaway of many people is that going forward, we may see even more tariff pass through.
I guess that was my question. If this is the start of a trend, what are we going to look like 6 months from now?
Yeah, so I think 6 months from now, critically depend on what happens on August 1st. Okay. And if Trump were to make real many of these tariff threats, it means that aggregate tariffs can go up as high as low 20s, which could deal a shock to S&P 500. And because I think right now markets are not really priced in for a big rebound on the tariffs level. And I think that shock, if it generates a repeat of Liberation Day type of shock, could lower consumer sentiment once again. So because we just saw a little brief rebounds, that could be short-lived if tariff levels were to rebound.
Okay, so if we're thinking about the tariff level 6 months ago, I feel like you can't answer this next question without knowing what that is, or 6 months from now. 6 months from now, where could the Fed funds rate be depending on where tariff levels are? Because the president once again argued just now that rates are still too high. He wants to see a cut. Does this data suggest that the Fed is going to be prepared to do so?
Yes. So the Fed really cares about core PCE inflation. And I think that the core PCE reading for this month will be much hotter than the CPI today. In fact, our estimate is for core PCE inflation to be around 0.34 in that vicinity, which is almost twice as high as the last month. And I think to the Fed's perspective, that they might look at this and think that they have been correct in holding rates constant.
The president just said, as part of that conversation, that the U.S. should have the lowest interest rates in the world. If we did, wouldn't that mean we were going into or coming out of a recession?
Well, there are many reasons why rates could come down, but certainly I think the current macro situation with so much uncertainty and unknowns about where trade policy could go, Fed was acting in a cautious way in not cutting rates in case that tariffs were to increase or and cause inflation to flare up. So that's the Fed's perspective.
Mm-hmm.
All right, Anna Wong, chief U.S. economist for us at Bloomberg Economics, reacting to President Trump's remarks from moments ago, as well as the inflation data we got today. Thank you so much. And we want to check as well on how the markets are interpreting this data and what it may mean as we get a check on those from Charlie Pellet up in New York. Hey, Charlie.
Hi, thank you very much, Kayla Lines. Little change on the S&P 500 index in the red, down by 6 points right now. That is a drop of 0.1%. Relatively tame inflation data failing to ease Wall Street's worries about the impact of tariffs. Initial rallies in stocks and bonds have sputtered on bets that the Fed will keep rates on hold for now. The Dow, though, down 335. That is a drop of 0.7%. NASDAQ pushing higher on China chip news. Right now, we've got NASDAQ up 121, a gain there of 0.6%. Those chip names, by the way, NVIDIA up 3.8%, Advanced Micro Devices up 6.4%. 10-year 4.48%, the 2-year on the CPI Tuesday 3.95%, and the 30-year at 5.01%. Gold now down 0.5%, 33.28 the ounce. West Texas Intermediate crude down 0.9, 66.36 a barrel. Balance of power continues right now, and back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lines.
All right, Charlie Pellet in New York, thank you so much. Joe Matthew and myself, of course, in Washington. President Trump, however, is no longer in the nation's capital. He is on board Air Force One, bound for Pittsburgh, where he will be attending the Pennsylvania Energy and Innovation Summit later this afternoon. It is underway, in fact, right now as we speak, and that's where we find our colleague Tyler Kendall, Bloomberg Washington correspondent, who is in the field for us today. And Tyler, of course, this Energy and Innovation Summit is really all about artificial intelligence, and you've been having conversations around that all day today. Tell us more.
Yeah, hey, Kelly, exactly right. We're here to talk about the future of the U.S., trying to keep an edge when it comes to AI, but a big part of that is finding the energy to fuel it, because it's actually kind of difficult to pinpoint just how much energy artificial intelligence uses, but we know that it uses a lot and that the demand is only growing. A recent analysis from Goldman Sachs shows us that energy from AI data centers is expected to increase by 160% between now and 2035. So there is this huge surge in demand. So that's a big focus of the conversation here today. And I actually had the chance to speak with the Energy Secretary, Christopher Wright, about this idea that the administration is trying to use deregulation as a way to boost energy production in the United States. But I also was asking him about costs and how tariffs come into the picture. In particular, as you're about to hear, how that 50% tariff on copper that's set to go into place on August 1st will impact the industry, considering that copper is really essential when it comes to getting this power over to the AI data centers.
Well, I think the biggest impact of that 50% tariff on copper is going to speed up copper mining in the United States. We have enormous copper resources here. We have some huge mines that have been trying to get going for years. We want to get copper production growing rapidly in this country. Copper, like steel, is just essential to everything that happens in the world.
Should we expect the energy industry to get some sort of tariff carve-out moving forward?
I believe the president plans no special carve-outs. He wants to reindustrialize the United States of America. There's a lot of tools to do that. Make it easy to invest in the United States, make it attractive to invest in the United States, and tariffs are an additional element of that toolbox.
I'm sure you're talking to industry, though. Is a carve-out on the table? Are there any negotiations underway for, say, the oil industry to get a carve-out when it comes to the equipment that they use in the field, like copper or steel, for example?
No discussions right now. We are hearing from the industry, and of course this is true. If you incrementally raise the cost of projects, that hurts the economics of them. We want to do everything we possibly can to maximize investments in the United States so jobs and opportunity come here to our country.
Lastly, I just want to ask you a geopolitical question, because we did hear from President Trump yesterday threatening a 100% so-called secondary tariff on countries that import Russian energy supplies. If that were to go into effect, what would that do to prices in the global energy market?
Something like that would likely drive oil prices up. I think President Trump's strong agenda there is to end the war in Ukraine. Our hope is that that large pressure will have an impact on Russia, and we can bring just a brutal war in Eastern Europe to an end. That's President Trump's goal, is prosperity at home and peace abroad. And the old formulas weren't working very well in that respect. So yeah, President Trump has very different tools, very different negotiating skills, and very different level of boldness. I think we're going to see tremendous growth in peace abroad and prosperity at home.
Joe and Kaylee, I want to point out something there, which is that he said that carve-outs aren't really on the table at this point, but I did speak with the head of the American Petroleum Institute, which represents the industry, and they said that they are lobbying the administration for some sort of carve-out, even if it were to be short-term, in particular, to help get some sort of relief when it comes to the supplies and the materials that go into the infrastructure that helps them move the energy, such as copper or steel.
Tyler, I want to ask you about this summit that you're attending. Of course, the president's on his way to you right now. $70 billion, as you've been reporting, in corporate investments, the likes of Blackstone, CoreWeave. What else is happening there on the ground that we're going to learn about today when we connect the dots between AI and energy?
Right, so Joe, these investment announcements really are spanning where the money is going. It could be for data centers or the energy infrastructure. Of course, as we're discussing, perhaps more money behind drilling in order to get the energy levels up to meet the production demand. But it's also about this idea of training the AI workforce and AI apprenticeships, for example. Those are some of the themes that we are expecting the president to touch on. The administration really has taken sort of a broad approach when it comes to trying to maintain this edge in artificial intelligence. It's that part of engaging with the private sector that we often hear President Trump talk about, this need for investment to come into the United States in order for the U.S. to compete, paired with the other part of their deregulation agenda. And of course, deregulation, we talk about it with energy, but it is a really big topic when we are discussing artificial intelligence. We saw basically this play out during the reconciliation package when some of these big tech companies weren't happy with how that ultimately shook out, with one of those provisions being stripped out that would have imposed that moratorium when it comes to state regulation. So these are all some of the big questions that are being debated here today, as we really do see this coming together of the administration, but also the private sector.
Well, and Tyler, just quickly on that deregulatory effort, is there a sense that that can happen quickly enough that energy supply specifically can be unleashed with demand rising exponentially to power artificial intelligence?
Well, it depends on who you ask, and I actually posed that exact question to the Energy Secretary, who said that yes, but it's going to be difficult. A lot does need to happen in order to get this up to the sort of levels that we need to see, and I mentioned it before. Right now, there's not really a number of just how much energy AI uses. We just know that the demand is going up. But if you ask the private sector, they say that they are ready, willing, and able. They just need to see the deregulation environment behind it. For example, I spoke to the Constellation Energy CEO, who has inked some pretty big deals with Microsoft and Meta, for example, to have nuclear come into the picture. And he told me the same exact thing, that they are ready to go, but they really just need the regulations out of the way. Of course, this poses other issues for why the regulations were in place, and that's a whole other debate that we could get into.
Really interesting. Boy, you're keeping good company, Tyler. Spending time with the stakeholders today in Pennsylvania, Bloomberg Washington correspondent Tyler Kendall in advance of the president's arrival at the Pennsylvania Energy and Innovation Summit. Pretty interesting stuff, Kaylee, that we'll be talking about more on the late edition here of Balance of Power. President Trump on Truth Social saying the U.S. will be the undisputed king of artificial intelligence, something that he's been leaning into for months now.
Indeed, as he leans into other things as well, encouraging Republicans to pass the various crypto bills that are coming to the floor this crypto week. We're going to have more on that in the late edition of Balance of Power. We'll actually be joined by two members of the U.S. Senate. Senator Tina Smith will be with us, the Democrat, of course, and Republican Senator Tom Tillis, who's, of course, not seeking re-election.
I'm looking forward to that one. He can speak freely now, and he will on Bloomberg TV and radio starting after 5 p.m. Eastern, so we'll meet you back then. Alongside Kaylee Lyons, I'm Joe Matthew. This is Bloomberg.
Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everyone, live on Bloomberg TV, radio, YouTube, and Bloomberg Originals. It is Bloomberg Business Week Daily on this Tuesday, July 15th, 2025. I'm Tim Stenivek, along with Emily Graffeo, who's in for Carol Masser this afternoon. And Emily, we're seeing some buying when it comes to the tech names, thanks to something we're going to be talking about a little later, those chip stocks higher for a pretty good reason. But other than that, investors kind of shrugging off this inflation print.
They're shrugging off the inflation print. And also, amidst all of the noise here when it comes to earnings, we have the S&P 500 basically flat right now.
Hey, we're going to have much more on the markets in just a second with Charlie Pellet. In the meantime, big banks is certainly our focus. Half of them have reported. We've got the good, the bad, and I don't know, maybe we can say the ugly.
And a great day for chips, specifically NVIDIA and AMD. We have Ian King on the dramatic reversal of the Trump administration.
Also, speaking of AI, we're on the ground at the inaugural Pennsylvania Energy and Innovation Summit as President Trump makes his way there to Pittsburgh. We're going to hear an update from Tyler Kendall in just a few minutes. In the meantime, a check on the day's trade and top business stories. Here he is, Charlie Pellet.
Thank you very much, and here's what's going on. We've got the Dow, the S&P lower, a whole lot of nothing, as you guys said, on the S&P right now, down 262.65, drop there of under 0.1%. Earlier in the session, though, we did see the S&P rally to 6,300 before retreating. The NASDAQ Composite Index up 145 right now. For NASDAQ, that is a gain of just about 0.7%. We got NASDAQ getting a lift, NASDAQ 100 as well from those chip names specifically. AMD, Advanced Micro Devices, and NVIDIA. NVIDIA right now up by 4.1%. Big member of the Mag 7 Index, the Bloomberg Mag 7 Index up by 1%. The 10-year, 4.48%. CPI Tuesday, we got the PPI tomorrow. The 2-year, 3.95%. The 30-year, 5.01%. Gold down $15 the ounce, 33.28, down 0.5%. And West Texas Intermediate crude down 0.9%, 66.39 a barrel. Bitcoin right now down 2.4%, 117,291 on Bitcoin. Earnings news, specifically big banks. We'll have more coming up in a moment, but JP Morgan Chase now down by 0.9%. Citigroup surging 3.3%. Wells Fargo now down by 6.7%. For on-demand news, 24 hours a day, subscribe to Bloomberg News now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. You heard some numbers there from Charlie. Worth repeating a couple of the reasons behind some of these big bank moves today. JP Morgan Chase's investment bankers eked out a surprise gain in the second quarter. It signaled what may be the start of a deal-making rebound after widespread hesitation tied to U.S. tariff policies. Wells Fargo shares falling, down now by 6.7%. The bank reported net interest income for the second quarter that missed the average analyst estimate. And Citigroup reported solid beats on FICC and equity trading revenue. The bank also said that it would ramp up stock buybacks following a strong result in regulatory stress tests. Citi shares up 3.3% right now. Let's get to it with Sri Natarajan, Bloomberg News chief Wall Street correspondent, Shalini Basak, Bloomberg News and global finance correspondent. They both join us here in the Bloomberg Business Week studio. Sri, where do you want to start?
Well, let's start at Wells Fargo because that is the most striking number coming out of the results this morning. The stock is down 6.7%. If that holds going into end of day, that would be the worst performance for the bank stock on earnings days going back at least 4 years. And it is a surprise because we're coming to this news on the back of the June announcement from the Fed that said the asset cap that had been placed on Wells Fargo has been lifted. The bank is finally unshackled. So perhaps investors and analysts were heading into this earnings day call expecting some big announcements from the bank, expecting some big growth outlook. Charlie Scharf, the CEO, has repeatedly said that just because the asset cap has gone doesn't mean our strategy changes overnight. It's not like flipping a switch. It gives them the firepower to invest and grow in various areas, and they've identified a few key spots, but you won't see immediate results. And the second quarter results kind of bear that out. They cut their NII guidance. Their expenses for the full year are likely to be higher than what analysts expected. Combine that with all the optimism, the excitement with which investors headed into the day, the result is you get a stock that's down 6.7% with about 2 hours of trading left.
Shonali, Citi is a different story here because that stock is rising to its highest level since 2008. We know that that's on this stock buyback plan, but just walk us through what stood out to you on those Citi results.
Right. You have Citigroup trying to get to their return on tangible common equity targets of 10 to 11%. And Jane Fraser, the CEO, said it'll take a minute to get there. But of course, improving profitability is a huge part of this story. Citigroup still trades at less than tangible book value. So people are waiting for it to get to par. This is the idea to get there. So they were the cheapest among the banks. I think that this is really interesting. If you look at the price to tangible book values of the banks today, it will show you the types of businesses that Wall Street is really betting on. Sridhar, Morgan Stanley is more valuable today than JP Morgan. I think that that is a fascinating statistic here because it shows you that the more Wall Street weighted banks, and by the way, Citigroup is showing that it could fire on cylinders of those Wall Street businesses, trading, investment banking. They've been gaining some share. This is surprising. They brought in a lot of new stars to do this. There were doubts when those people came in, and they're showing you that they're coming in to take some business, right?
Yeah, well, let me give you a quick counter to that. Yes, price to book, price to tangible book, they might be better than JP Morgan, but that doesn't mean necessarily that they're more valuable than JP Morgan. The piece of the business that they're in is clearly favored by investors, favored by analysts, and the fact that you have a market out there that appreciates consistent fee-based revenue growth. But to be a giant bank, to be a behemoth like JP Morgan, you have to have a big presence in the consumer economy. You have to have a big presence in all of Wall Street's chief operations, and JP Morgan has that.
Okay, fine.
Which
King
is
of the
why
castle.
it is a
King
giant
of the castle. It's the better, bigger Morgan. But it is still interesting that today, at least on that multiple.
That I will give you.
Yes. I told you we would make this fun for
you. Are you guys done? Or are you gonna keep?
We're like a brother-sister pair.
I love this. I love this.
Can I set him off once more?
I will ask you to do that in just a minute. In the meantime, you guys mentioned JP Morgan, so I want to bring in some commentary from JP Morgan that you highlighted, Shonali. Quote, the U.S. economy remained resilient in the quarter. The finalization of tax reform and potential deregulation are positive for the economic outlook. However, significant risks persist, including from tariffs and trade uncertainty, worsening geopolitical conditions, high fiscal deficits, and elevated asset prices. Shri, we look to Jamie Dimon, a lot of investors look to Jamie Dimon as sort of a weatherman when it comes to taking the temperature of the economy. What was the takeaway from him today?
Look, I know we like to compare him to a weatherman, and he also loves his there are dark clouds on the horizon analogies. But to be fair, he's not a great weatherman because a weatherman has to tell you whether the weather is going to be good or bad today and tomorrow and day after tomorrow. What Jamie Dimon has consistently pointed out with respect to risks in the system, the geopolitical tension, the risk of extensive borrowing by the U.S. government, these are not problems that are going to torpedo the system tomorrow or next quarter. These are long-term problems. And Jamie Dimon is right to express those as real concerns that exist in the system. But that's not something that investors are too fussed about right now when they're trying to analyze this quarter versus next quarter and the coming few quarters. So you go back to the first part of that statement where he did express optimism, and that's what takes you back to the environment we're in for the biggest banks right now. Tax regulation. Tax cuts, deregulation, these have been crystallized with the bills that have been passed in Congress. That means there's a very clear runway for banks to see catalysts for growth. And as we get to the other side of the trade policy and the tariff uncertainty, you will also see that element of when all of these people were talking back in Q1 about clients and investors and companies tapping the brake. Tapping the brakes, not slamming the brakes, which effectively means the car is still running. And now they can accelerate as they get more clarity. So even parts of the business that had been lagging a little bit, like deal making, can rev on all cylinders. And that only means good things for the biggest banks that have also effectively attached to themselves to the highest end of the U.S. economy. So even if you start seeing some worsening in the broader consumer economy in the lower segments, that is not really affecting these biggest banks just yet.
Shonali, I'm wondering if we could bring you in here in terms of the increase in deal making that we did see this quarter. What was really driving that? Is that coming from the Trump administration being maybe a little bit looser when it comes to some regulations, or was it just a natural push of the economic cycle?
It's a great question. I have numbers for you. So the deal flow in the second quarter, according to Bloomberg's data, this is mergers and acquisition alone, we're up by 16% roughly. For the first half of the year, it's up by 23%. Now, last year was a dog, right? Nothing was happening, nothing good. And in fact, if you look at this year, you have a lot of deal activity that's still on the sidelines. At the same time, I stole this from the bank that Sridhar used to cover so closely, Goldman Sachs. You have an institutional loan market that is about $1.5 trillion overall. By comparison, the private credit market is $1.7 trillion. And so you have these banks fighting now for more share in that lending market because private credit now is actually bigger than the institutional loan market. And so you had overnight, you've got to love a good announcement the night before earnings when JP Morgan comes out and says that they're going to organize a team to do more public-private markets activity. So yeah, things are coming back. They're not booming back. And remember, some of the stuff that we're seeing out there is kind of frothy, right? It's SPAC deals and Bitcoin treasury deals and IPOs of crypto companies. So there are deals coming back. We spoke to Kristen Roth-Clark a little earlier today at Barclays, a tech banker there. They see a lot more in terms of IPO activity, but this is not a gangbusters year. And in fact, if the numbers that I've given you, JP Morgan's jump in investment banking activity trailed those numbers. So the idea is that it'll catch up as the pipeline could potentially grow.
Shonali Basak, Bloomberg News, global finance correspondent. You've been here since 5 a.m. You got to go. Shri, we're going to keep you for another minute because we're going to look ahead to what we have coming up tomorrow. Bank of America, Morgan Stanley, and Goldman Sachs. Big picture, I want to start with Bank of America because we get such a good outlook on the economy from Brian Moynihan. What are you expecting from Bank of America?
Again, you will hear some of the same things that you heard from people like Jamie Dimon and Jane Fraser today, which is it's a resilient economy out there. The consumers are fine. The consumers are being discerning. The consumers are disciplined. But the challenge when you try and decipher these announcements and these statements is these executives and these banks in particular they will also tout the fact that they serve the more affluent customers. Their portfolio is made of more prime customers than subprime customers. And if there is any weakening in the economy, it probably the cracks start appearing in the subprime segment that these banks don't necessarily serve, which is why if you even compare the performance of the biggest bank stocks versus, say, the regional banking index, you will see a bit of a disparity. And that is interesting. But as you sort of wake up tomorrow and hear Brian Moynihan, hear other Bank of America executives, you will in all likelihood see a repeat of the sentiment that's already been expressed today, which is even if consumers say they're uncertain about the future, it's not really being reflected in their actions just yet.
Okay, Shri, you got to go home and get some sleep also because you've been here since the wee hours this morning. Shri Natarajan, Bloomberg News Chief Wall Street correspondent, joining us here in the Bloomberg Business Week studio. So that's a look at three of the big banks, which we're interested in not just for their results, but also for their macro commentary. Jayati Bardwaj is also watching this commentary closely. She's director in FX and EM strategy at TD Security. She joins us here in the Bloomberg Business Week studio. I want to shift gears a little bit and talk capital flows because that's certainly under your purview. In this new tariff regime, we've got a great story on the Bloomberg about the maker of Kerrygold butter, a favorite of pretty much everybody, has slowed its U.S. investment as it waits for more clarity on President Trump's trade settlement with the EU. Just about an hour ago, we heard from Embraer's CEO. He said he may revisit its business plan due to U.S. tariffs. It's an evolving situation, certainly, but how do you see tariffs changing the flow of capital, big picture?
I think the biggest thing is that they have injected a lot of uncertainty into markets. And I think last week was that wake-up call because markets had become a little too sanguine on tariff risks, and we came back with multiple letters, and that uncertainty crept back up, and that's why the dollar is getting the bounce that we're seeing. You're also seeing the change in capital allocation, which you rightly mentioned. The biggest mover and the first mover actually has been Europe because they have been very quick to repatriate, and they've been very quick to bring money back home into local equities, which is actually what's boosting the currency at this point.
I want to jump in because as I was asking you that question, we got a red headline crossing the Bloomberg terminal. The president says that Indonesia will buy 50 Boeing jets in a trade deal. How do you look at a U.S. manufacturer, a massive U.S. manufacturer, as a bargaining chip when it comes to these negotiations?
The thing is, we've seen with Trump is that we've seen a lot of frameworks or skeletons of a trade deal. But right now, we're still figuring out a lot of the specifics. Even with the UK, we don't know what the specifics are. That's why markets are in a very uncertain mode. That's why you've not seen markets rally on all of these trade deals the way you would expect otherwise. There's still a lot of uncertainty, especially to the degree that tariffs are being used as leverage to extract a lot of concessions from the rest of the world. The one interesting headline which came out a few days ago is that the European Union is now talking to its other non-US trading partners to come up with a joint trading alliance and take a stronger stance to the US. I think those are also the things which are interesting, because while the US is a very strong dominant power in the geopolitical space, it is actually forcing the rest of the countries to step up and do a lot more fiscal spending and also a lot more trade amongst themselves.
Let's zoom out and talk about how all of that impacts the direction of the dollar. We've seen a lot of weakness this year when it comes to the dollar. What do you see the catalysts next, at least for the direction of dollar strength right now?
I would say that in the very short term, I think there's going to be a tug of war between just short-term technicals, which tell you that the dollar is very cheap from any historical standpoint, which is why you will see some times when the dollar is trying to bounce back higher. But structurally, I think this is as convincing a time to sell the dollar for more structural reasons than you would have received. For the longest time, everyone would tell you that the dollar is overvalued, but you could never come up with good enough reasons or catalysts for that dollar, weakness to sustain. But after a very long time, I can now come up with a lot of reasons for why the dollar, weakness will sustain unidirectionally in the remainder of the year. The capital allocation, that's definitely one which we've seen in Europe. It remains to be seen if other countries follow. But another very interesting bit is that the global investors of the world have been overweight US equities, but they were actually doing that unhedged. They were not hedging their currency risk at all, because the dollar would rally and give their portfolio a boost. But that's changing, and that's why the dollar is structurally seeing that pressure downwards.
What about the Fed here? If we only get one cut this year, does that change the calculus of just how much we see the dollar weaken for the rest of the year?
Not a whole lot, because actually what's interesting is that the correlation between US rates and the dollar has actually been broken. The correlation between the US dollar and a lot of factors are broken. You would see yields have backed up, commodity prices have backed up, equities have backed up, but the dollar is the only asset class unidirectionally heading lower. So that correlation, which you rightly pointed out, would have been very strong at one point. It does not matter anymore because the structural factors at play are proving to be stronger, a lot more than this correlation to rates.
JT, what happens to the value of the dollar if Fed Chair Powell is somehow ousted?
It is definitely a question we've been discussing a lot, and it's definitely topical with all the headlines. There are a lot of questions around the legality of all of this, but it definitely is, the more conversation we're having about this, the more I think it's edging dollar into emerging market playbook.
It's daily from the president.
Yes, I think it will definitely be injecting a lot of risk premium into markets, and I think even Besant and Trump are careful about that. That's why whenever they're asked, straight up, are you going to fire Powell? Till date, they've said no, because they know that the minute that answer shifts to yes, markets will, price in, Treasury is going to sell off, and the dollar is also going to massively sell off.
So is the dollar a bigger guardrail, or is our Treasuries a bigger guardrail?
Treasuries are a bigger guardrail because till date, we've not seen any active signs of investors selling Treasuries. So that has still been intact, with Treasuries being the global safe haven of the world. The dollar correlation is already, it's scraping away already. So I think Treasuries is still the more intact one, which I think you need to preserve. And I think that's why Besant and Trump have been very guarded in their comments about Powell today.
JT Bardwaj, always good to see you. Thanks for joining us on Bloomberg Business Week Daily. Director in FX and EM Strategy over at TD Securities. Coming up next, we're going to take you to Pittsburgh to a major summit on energy and AI. In fact, the president is on his way there right now. That's next on Bloomberg Business Week Daily.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got the S&P 500 index flat on the day right now. CPI Tuesday, the Dow lower, NASDAQ Composite Index pushing higher. Relatively tame inflation. Data failed to ease Wall Street's worries about the impacts of tariffs. Initial rallies in stocks and bonds sputtering on bets that the Fed will keep rates on hold for now. At one point this morning, we did see the S&P 500 index briefly touch 6,300. So again, the S&P 500 index unchanged on the day. The Dow down 302, now down 0.7. NASDAQ up 153, a gain there of 0.7%. 10-year at 4.48%, with the 2-year 3.95%, the 30-year 5.01%. Gold down 0.5%, 33.26 the ounce, and West Texas Intermediate crude down 0.7, 66.52 for a barrel of WTI, and Bitcoin down 2.5%, 117,230 on Bitcoin. President Trump says Indonesia has committed to purchasing $15 billion in U.S. energy, $4.5 billion in American agricultural products, and 50 Boeing jets. That according to a post on Truth Social. Recapping, S&P 500 index little changed, up by 0.5 point. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. In a little over an hour, President Trump will tout $70 billion in AI intelligence and energy investments at the inaugural Pennsylvania Energy and Innovation event in Pittsburgh, along with key members of his cabinet, Energy Secretary Chris Wright, White House AI and crypto czar David Sachs, EPA Administrator Lee Zeldin, and more. We'll also hear from CEOs of major companies in the AI space, including CoreWeave and Anthropic. Those folks are expected to attend, too. The president on his way there now. Also there, Bloomberg News White House correspondent Tyler Kendall. She's on location at Carnegie Mellon University in Pennsylvania. She's been there all day. Tyler, when we think of Pennsylvania, we often think about steel and traditional blue-collar jobs. Is this the start of a new economic paradigm?
Yeah, hey, Tim. Well, the state and the senator that's throwing this, Dave McCormick, would certainly like to think so, having this be in Pittsburgh and at the center of this. I would also point out that another part of this summit, yes, we're talking about artificial intelligence, but we're also really talking about the energy that's needed to power it. And Pennsylvania is the second largest oil-producing state after Texas. And there really does seem to be a focus here on how there can be this combination between AI innovation, but also energy production that's needed in order to power it. Now, you mentioned there at the top that President Trump is about to come here, speak, and talk about investments. We actually got an updated number from Dave McCormick's office. The number is now $90 billion worth of private sector investments that are going to span a range of things. We're talking about data centers. We're talking about updating infrastructure, which is, of course, very important in this. But we're also talking about perhaps some changes in the workforce, this idea that there could be new training or AI apprenticeships in order to get the AI economy up and running in a way that this administration at least says they want to make sure they can maintain in order to keep that edge when it comes to the competition with China.
Tyler, like Tim said, there are going to be a number of AI CEOs in attendance at this meeting. Who exactly is going to be there? What does it signal about who's winning from these potential investments?
So there's a range of CEOs that are going to be here. Some are coming from this point that they are pledging these investments. For example, Bloomberg News reporting that Blackstone is going to pledge $25 billion when it comes to investing in AI data centers and infrastructures. And then we're seeing some of the innovators in the space here, like CoreWeave, Anthropic, companies like that are trying to make the case that they are staying ahead and maintaining this edge when it does come to innovation. We heard a really big announcement yesterday from Mark Zuckerberg when it comes to Meta, and a huge pledge to invest in data centers going forward. It's actually something that I asked the Energy Secretary about, Christopher Wright, earlier, because when you do have such big investments, that does bring us back to this idea about energy and whether or not the U.S. has a capacity to fulfill some of these really lofty goals. He ultimately said that he thinks that we do, but it's going to be a tough challenge, and it's one that they realize isn't going to come so easy, and that's going to take a confluence of different sorts of events. Mainly, when you ask the administration, that's all about their deregulation agenda.
You know, what's also interesting here is that how is the U.S. really going to be investing in data centers when there are tariffs on materials, think copper, that are required to power these data centers and to require to make more energy infrastructure in the U.S.?
Right, that's a really great point. It's actually one of the questions that I posed directly to the U.S. Energy Secretary when we have 50% copper tariffs expected to go into effect on August 1st. And we know that materials like this are really important for AI data centers, but then I'd also point you to those steel tariffs. And we're starting to hear the industry really talk about this idea that they want carve-outs, even if it's a short-term carve-out, so then they can let production reshore to the United States. As you're about to hear, I think we have the bite. I did ask the Treasury Secretary specifically if carve-outs are on the table, and here's what he told me.
I believe the president plans no special carve-outs. He wants to reindustrialize the United States of America. There's a lot of tools to do that. Make it easy to invest in the United States, make it attractive to invest in the United States, and tariffs are an additional element of that toolbox.
Tim and Emily, that's probably not too welcome news when we are talking to industry officials. Like I sat down with the head of the American Petroleum Institute who told me that they're in active discussions trying to get some sort of exemption here. And often we hear this pitch from industry that perhaps there could be a short-term exemption so then they can have time to change their supply chains. But if you listen to the Energy Secretary, it doesn't sound like there's a lot of room for negotiation.
Gonna have to leave it there. Tyler, appreciate your time this afternoon. You got to run because I know you got a big interview coming up with EPA Administrator Lee Zeldin in just a few minutes. That's Tyler Kendall. She's Bloomberg News White House correspondent on location at Carnegie Mellon University in Pittsburgh. Well, we're going to continue with AI because shares of NVIDIA and AMD just surging. NVIDIA up 4%, as is AMD. Actually, AMD, excuse me, up 6.3% now. This after the company's plan to resume sales of some AI chips in China after securing Washington's assurances that such shipments would get approved. It's a dramatic reversal from the Trump administration's earlier stance on measures designed to limit Beijing's AI ambitions. Ian King is Bloomberg News U.S. semiconductor and networking reporter. He joins us from our Bloomberg newsroom and bureau in San Francisco. Ian, what is this reversal? The news crossing late last night, obviously good for shareholders who are long these companies. What was the reversal?
Yeah, I mean, in a broader sense, the trend for these companies has been sort of bad to worse, which means, you know, access to their largest potential market, China, has been becoming tighter and tighter, and it's becoming more difficult for them to do business. What they were told was, and this is the U.S. Commerce Department, was actually, look, these licenses, these applications that you've put in for permission to ship some of these chips to China, guess what? We're going to take a positive look at them. So this was really kind of a pleasant surprise if you're a shareholder, where the expectation has been that this situation was going to get worse and worse.
A pleasant surprise and somewhat of an about face, right, when it comes to the presidential administration's policies here. What does this about face really signal about the negotiations going on between China and the U.S. when it comes to semis?
Yeah, I mean, I think you nailed it in terms of negotiations, because as we've seen from senior administration officials who've been on our TV and been on other media sort of talking about this issue today, they've said, oh yeah, we sort of made this deal a while ago when we were asking the Chinese to give us access to rare earth minerals and magnets, and we sort of told them that this might be a thing. So what we're kind of learning here is there's clearly a quid pro quo type situation, and obviously implies that going forward, if we're going to see more of these trade type deals, then perhaps AI exports to China are on the table in a way that we thought they perhaps weren't.
At issue are these H20 chips. You mentioned different officials on our air. One of those officials, Treasury Secretary Scott Bessent, he was on Bloomberg Surveillance a little earlier today. Here's what he said about those NVIDIA H20 chips.
Be a judgment that the Chinese indigenous manufacturers already have an equivalent chip. So, you know, if there's an equivalent chip, then the NVIDIA H20 could be sold. One thing that we do not want is a digital Belt and Road springing up around the world because other countries or China are substituting for our American chip manufacturers.
That was Treasury Secretary Scott Bessent on Bloomberg Surveillance earlier. I'll repeat a little bit of what he said. He does not want a digital Belt and Road springing up around the world. That, of course, referring to what China's been able to do physically around the world when it comes to trade, when it comes to ports, when it comes to building roads throughout the entire world, or almost the entire world, much of the developing world, I should say, and exerting its own influence on countries around the world that way. Is there already a digital Belt and Road initiative that China has been exerting on the rest of the world, Ian?
In this particular area, in AI, not yet. But what Jensen Huang, the CEO of NVIDIA, has argued, and some of his peers have argued, is like, look, if you don't let the US technology become the absolute center, the base layer of this giant AI build-out around the world, somebody else will. Who will that somebody be? Most likely China. Right now, they're not as good as we are. Right now, they're way behind us. But guess what? If you give them the chance, they'll catch us up. That's been the kind of, hey, you need to let us be out there and propagate our AI kind of argument that they've made. And this is clearly something that we've seen administration officials kind of parrot or adopt, if you like, in terms of their explanation of why they're going to let NVIDIA and AMD sort of play in China to a greater extent than we thought they would.
I'm wondering how this development, I guess what it means for U.S. tech and AI companies now versus companies, I'm thinking DeepSeek in China, that are also trying to kind of get ahead in the AI arms race. Does this level the playing field?
No, it doesn't. I mean, you know, it's still a very distorted, if you like, situation. US companies are not going to be allowed to sort of absolute free access. You know, the US administration officials were very clear to point out that, hey, we're only letting them have these access to these older chips, right? That nothing new, nothing state-of-the-art is going to be allowed there. So those Chinese companies that are actually developing, they will have access to some, perhaps US technology, but nothing state-of-the-art. So they've kind of got to make their own way still, and that's obviously a hard road.
How are they doing in that?
It depends who you speak to. Those that want to argue for more freedom, that want to argue that the US is at risk, are saying the Chinese are finding a way. Huawei's doing really well. DeepSeek is doing really well, and they're making do and mend with very little. So guess what? If they, over time, they're going to get better. Others are saying, no, they're way behind us here. This is our chance to really hold them back, and the US is forging ahead. So, you know, the argument tends to shift according to who's making it and what the motivations are. What the reality is will be determined by the market and the use of these systems worldwide.
Ian, just 10 seconds on sort of the next question when it comes to what NVIDIA and AMD and the like cannot still export. What is it?
Yeah, I mean, the next question is how many of these licenses are they going to get, and what does that mean materially for them? And the answer is we don't really know yet how quickly these licenses will come, how quickly they'll be able to ship, and how much demand there'll be, whether it'll restore the lost revenue that they've already had to point to.
Well, there's certainly demand for shares of these companies today. NVIDIA up 4%, AMD up 6.4%. Ian King, Bloomberg News U.S. Semiconductor and Networking reporter. Always love it when you join us on Bloomberg Business Week Daily. Coming up next, we're talking BlackRock earnings.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Little change right now for the S&P 500 index. Down a point, down less than 0.1%, 62.67. At one point this morning, we did have the S&P rally to 6,300 briefly. The Dow now down 306, drop there of 0.1%. But chip news out of China helping send NASDAQ and the NASDAQ 100 index higher. Right now, NASDAQ is up 132 points, up 0.6%. We've got the NASDAQ 100 index up by 0.5%. NASDAQ, by the way, trading at a record. Our Mag 7 index up now by 1%. The 10-year, 4.48%. CPI Tuesday with the 2-year, 3.95%. And the 30-year at 5.01%. Gold now down 0.4%, 33.29 the ounce. And West Texas Intermediate crude down 0.5%, 66.62 a barrel. NVIDIA and AMD plan to resume sales of some AI chips in China after securing Washington's assurances that such shipments will get approved. NVIDIA right now up 3.9%. Advanced Micro Devices up by 6.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, thank you, Charlie. Well, those are the indexes, but when it comes to the individual stocks, one of the worst performers right now in the S&P 500 is BlackRock. After hitting a record high on Monday, the world's largest asset manager is now down about 5% today, headed for its worst earnings day drop in more than a decade. This after revenue and performance fees missed estimates in the latest earnings report. Total assets, however, hit a record $12.5 trillion as the company continues to grow its ETF business and expand into private markets. Again, this is an asset management giant here. Kathy Seifert is director at CFRA Research. She joins us from New Jersey to talk all things BlackRock earnings. Kathy, let's just get your high-level thoughts here on the price action that we're seeing right now. Why are investors so bearish on BlackRock today?
Sure. I think we can break it down into three main areas. The first is there was a large client redemption in the quarter, a $52 billion client redemption from one client. I think that spooked investors. Redemptions tend to do that. And that masks some otherwise really good fund flow trends. The second thing I think that also spooked investors, because the entire group is off today, was the higher than expected inflation number, particularly as we're likely to head into a summer where tariffs are going to probably potentially boost that number higher. And, long dated assets and highly correlated assets like those at BlackRock are vulnerable. Stocks are vulnerable to a correction when that happens. And then I think the third factor that drove today's performance was, for lack of a better word, the noise around all of the acquisitions that BlackRock has done. Having said all that, I am still positive on the shares.
It's the world's largest money manager. It's certainly known over the last couple of decades for the growth that it's seen when it comes to ETFs. And that's certainly Emily Grafeo's specialty in her coverage here as a cross-asset reporter. But BlackRock is going through this transformation right now. Private markets, infrastructure. What is its identity? And how has it communicated that to investors?
That's a really good question, because I think some of the shortfall today may have been investors sort of digesting all these changes, and also some of the execution risk inherent in that strategy. I mean, I do like the strategy, and I think BlackRock has these sort of three pillars of growth. One is the ETFs, as you mentioned. The other is their technology business, which is there is a secular shift among a lot of in the asset management space that's driving demand for BlackRock's technology services. And then the third leg to this strategy, which I think, to your point, that perhaps BlackRock needs to perhaps be a little more granular in the strategy, maybe highlight or elevate some of the people driving the strategy, and that is their shift into private assets and alternative assets. I think it's an important shift for BlackRock, and I think it's one that'll offer support to the share's valuation, but I think it's one that has, number one, some execution risk, and number two, is likely to make 2025 a transitional year for the firm.
Talk a little bit more about BlackRock's push here into private markets. Just how critical is it that they get this right? And the earnings that we've seen so far, this report today, did it tell us anything about how successful this push into alternatives has been so far?
Sure. And so, one of the challenges, given BlackRock's size, moving the needle is going to be a challenge. That's number one. I mean, we saw the AUM number, $12.5 trillion. A lot of it is in ETFs or in institutionally managed assets. And so the push to alternatives is likely to take some time. I mean, BlackRock's aspirational goal is to have 30% of revenues coming from technology and alternatives by 2030. It's about, last year, I think it was about 14 or 15%. So, we can sort of hang our hat on that number. I think the other thing to remember is this strategy, and I applaud this strategy. I do think it makes a lot of sense. They have sort of, and I'm going to say cobbled together, and there shouldn't be a negative connotation with that. They've sort of assembled a group of companies and built themselves a pipeline through which they will be able to push more product. And by that, I mean buying global infrastructure partners gives them exposure to infrastructure. HPS gives them exposure to private credit. Those are very important because the demand for both of those assets is expected to continue to grow, particularly among institutional pension funds, life insurance companies. That's a secular shift, and it's an important part of the market. And I applaud the fact that BlackRock is expanding its reach in that area.
I have to get an ETF question in here because, like Tim said, this is part of my focus on the cross-asset team at Bloomberg News. So BlackRock has more total ETF assets than Vanguard. But when it comes to flows, Vanguard has taken in more ETF inflows for the last 5 years than BlackRock. And I'm wondering if you think this is something that keeps Larry Fink up at night, this potential that Vanguard is going to overtake BlackRock in total ETF assets. Is this something that is important to BlackRock? And is it something that you're watching?
Well, I mean, definitely. I think the ETF marketplace represents BlackRock's ETF franchise is an attractive franchise, but I think growth there is going to be a challenge. I mean, the market, they're the leader. I would also point out, though, that BlackRock's lineup of ETFs has a greater representation in some of the faster growing areas, digital assets and things, alternatives, things like that. So while perhaps overall flows at Vanguard may be more than at BlackRock, they're flowing into some very low fee generating businesses. And one of the strategies at BlackRock is to have a shift to assets that generate a greater revenues, or a higher fee earning assets. So I think the focus at BlackRock is to obviously maintain their dominance in the ETF market space, continue to innovate there, which they have done, but at the same time push into areas where there still is a degree of, let's just say, pricing power on the part of the asset manager.
Hey, just 30 seconds, 20 seconds on its identity. If we think about peers out there, Vanguard's certainly one that Emily thinks a lot about. What about like a Capital Group? What are the other companies that you think are, or maybe an Apollo these days? Like, what is a peer now to BlackRock?
Well, that's interesting because I sort of would put, if you look at, again, I'm an equity analyst, and so my primary focus in terms of valuation is on the other publicly traded asset managers, and it's a very bifurcated group. Right. If you look at the way for example, the way S&P classifies the asset management group, on one end of the spectrum in terms of valuation, you have the private equity firms, Blackstone, KKR, and Apollo. Sort of sitting right in the middle of that, you have BlackRock. And then at the other end of the spectrum, BlackRock with, primarily a traditional asset manager shifting. And then at the other end of the spectrum, you have a number of the primarily active managers.
Yeah. Hey, Kathy Seifert at CFRA, thanks so much.
You're listening to Bloomberg Business Week Daily with Carol Masser and Tim Stenbeck on Bloomberg Radio and Television.
It is Bloomberg Business Week Daily. That is Emily Griffeo, Bloomberg News cross-asset reporter. She's in for Carol Masser this afternoon. I'm Tim Stenbeck. We're not seeing a lot of action in the S&P 500 today. Down 0.1%. The Dow down 0.8%. The NASDAQ is higher by 0.5 percentage point. That's kind of thanks to AMD and NVIDIA. Shares just surging today on that news that we got late yesterday about those export restrictions being lifted and optimism there. What's on your radar today?
Well, I'm looking at Treasury yields right now because after the inflation print, we really didn't see that much movement in the rate space. And now we're seeing yields climbing even after the core, at least the core number came in below expectations. So that piqued my interest. But let's take a look at some stocks on the move today. With us is Bloomberg News equities reporter Nora Melinda. I'm Emily Griffeo, here with Tim Stenbeck. Nora, what are you looking at?
Well, let's take a look at Newmont. This is ticker N that are lower this afternoon. We're seeing shares that are down about 6%. This is after market close yesterday. They said that their CFO, Kathy Ovalman, was going to be resigning from her role. We have Peter Wexler coming in as interim CFO rather. But this is until a permanent successor is named, and they weren't really expecting this. This was definitely a surprise. That's what much of the street is saying. BMO analysts writing that we're somewhat surprised that she'd only been in the role for about 2 years. but they do know that the average tenure of a S&P 500 CFO was around 5 years. So this was definitely a stark, surprising departure here.
July 24th is when we'll get second quarter results from Newmont, so keep an eye out for those in just about a couple of weeks. Newmont shares, ticker NEM, are lower on this Tuesday. What else are you watching?
Also looking at Trade Desk, that's ticker TTD, and we're seeing shares that are rallying right now. It's a $39.9 billion market cap company. It's an online advertising firm. It's hitting its highest level since February, and this is after it was added to the S&P 500. It'll be added ahead of trading on July 18th. They're saying that this inclusion is an additional confirmation of Trade Desk's very impressive fundamentals that's coming from Evercore analysts today. So we are seeing shares pairing a little bit, but definitely still pointing higher, up about 7.8% right now as we speak. But if you look on a broader scale, company's down about 31% so far this year.
But still index inclusion.
Yeah, still index inclusion.
Okay.
So interesting.
You never really know how they make.
Can you explain this, Emily?
The significance.
And like the optimism around this? It has to do with, okay, well now funds have to buy this stock, right?
What visibility?
Yeah, so there's like billions of dollars, it might even be trillions of dollars now, that track the S&P 500 through various index funds. And so what happens is once it's announced that a company is going to be added, there's a little bit of time between the announcement and when all of those big passive funds have to buy.
Absolutely.
And so in that interim period, hedge funds buy it, anticipating that it's going to go up. And so there's a little bit of like an index arbitrage trade going on.
We'll see if there's some movement.
And anticipation of big buying later on. There's buying now.
Well, we can't talk about stock movers without talking about all that's going on in the banking space. We know that earnings really kicked off this morning. So I'm looking at shares of Wells Fargo. It's among one of the worst performing stocks in the S&P 500. I'm actually looking at the KBW Bank Index. That's ticker BKX. And it's down about 2% right now. We're seeing Wells Fargo and State Street, some of the worst performing stocks in that index. But Wells Fargo, ticker WFC, is lower after reporting net interest income for the second quarter that missed the average analyst estimate. It lowered its full year guidance for net income and net interest income after another quarter of tepid growth. So they're saying that a lot of this lowered guidance will be on the mind of the market with the shares under pressure today, especially after rallying over the past month. So seeing the stock taking a bit of a breather right now, but when you do put that against some of the other results we got from like Citigroup, for instance, that's one of the best performing stocks right now in that banking index. It's rising to its highest level since 2008.
That's
after
wild.
Insane, right? The comparison here, it's saying that it would ramp up stock buybacks following a strong result in the regulatory stress test that we all have kind of been following here. So
Wells Fargo, WFC US down about 6%. JP Morgan reported earlier today down about 0.9%. And Citi, as you mentioned, highest since 2008, up 4.2% as we speak.
On a tear.
It makes tomorrow even more exciting,
right?
Because there's not a consensus of like, how are all the banks doing? We've seen this bifurcation.
So Bank of America, Morgan Stanley, Goldman Sachs, if we look forward a little bit.
Most definitely.
Those are the big ones.
Okay. Norma Linda, thank you so much. She's Bloomberg News equities reporter on today's Stock Movers. For more conversations like this, listen to our new Stock Movers podcast. You can subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Check out Stock Movers on Apple, Spotify, or anywhere you get your podcasts. Taking a look at how stocks are looking right now, seeing a little bit of a leg lower on the S&P 500, down 0.2%. The Dow down 0.9%, while the NASDAQ is in the green, up 0.4%. If you are sticking with us on Bloomberg Business Week Daily, we've got a great program coming up on radio, YouTube, and Bloomberg Originals. We're going to be speaking about today's big take. It's all about the quiet revolution that's happening at Vanguard. Also, a check on the global market for insurance, commercial insurance protection. We're going to be speaking with the CEO of Axis Capital Holdings. It's a $9 billion market cap company, publicly traded here in the U.S. And we'll also hear from Donald Trump Jr. That's next on Bloomberg Business Week Daily.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Michael Wallace. Inflation rose in June to its highest level in 4 months. The Labor Department says consumer prices were up 2.7% from a year earlier.
Meat and milk.
Produce, too?
Even just regular stuff like milk and eggs.
The price of everything is going up.
CBS's Jason Brooks says President Trump's tariffs are pushing many prices higher.
Food prices seeing a solid gain and gasoline prices rebounding from 4 straight declines. Grocery prices rose on big increases in beef, citrus fruits, and coffee, while shelter, medical care, and motor vehicle insurance continued to sustain strong gains.
But car and truck prices fell. They're cleaning up in the Northeast after heavy rains triggered flash flooding last night. CBS's Jared Hill.
The dangerous system dumped more than half a foot of rain in Scotch Plains,
I've never seen flooding like this.
triggering flash flooding and water rescues throughout the state. The town of Plainfield hit especially hard, with homes flooded and trees uprooted.
2 people died in Plainfield when floodwaters swept their car away. A lot of people in immigration detention centers will no longer qualify for bond hearings.
People living unlawfully in the U.S. for years used to be eligible for bond hearings, allowing them to fight deportation outside of detention centers. Now a policy change says all non-citizens who enter the U.S. illegally face mandatory detention. This woman protesting ICE policy says,
I have family and friends who are terrified.
The Department of Homeland Security coordinated with the Department of Justice on the policy shift. Allison Keyes, CBS News, Washington.
Congress is set to vote on whether to cancel $9 billion in federal funding for public media. CBS's Caitlin Huey-Burns says foreign aid, including an HIV/AIDS prevention program, could also be on the chopping block.
That's something that has long had bipartisan support. It was first proposed by President George W. Bush and has been approved by Congress a few times since then. The rescission's request from the White House cuts that funding. There are a couple Republican lawmakers who are concerned about that specific provision.
And there's late word Republicans have dropped the HIV program from the rescissions. Critics are blasting a plan by Israel's defense minister to move Gazans into a camp near the southern border with Egypt. CBS's Elizabeth Palmer is in Tel Aviv.
There is opposition inside Israel to the humanitarian city, but the government appears to want to forge ahead. In fact, the Prime Minister, Benjamin Netanyahu, has asked the army to speed up the plan.
Israeli forces killed at least 18 people today in the northern Gaza Strip. Stocks, that is, are mixed. This is CBS News. Israeli researchers say they've proven that plants talk and insects listen to them. CBS's Vicki Barker explains.
No, that isn't static. It's the sound of a tomato plant starved of water and screaming. Scientists at Tel Aviv University had already established that plants emit sounds at too high a frequency for the human ear to hear. Now they've found female moths avoid laying their eggs on plants emitting the rapid clicks that signal dehydration or disease, do lay their eggs on plants emitting the slower clicks that signal health. So not only do plants talk, someone out there is listening. Vicki Barker, CBS News, London.
Speaking of plants, police in Atlanta have arrested a traveler who had $3 million worth of drugs in his luggage at Hartsfield-Jackson International Airport. They seized 34 pounds of hashish, 12 pounds of THC wax, and 5 pounds of marijuana. The man was headed to Brazil. He was charged with drug trafficking. Michael Wallace, CBS News.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
It is Bloomberg Business Week Daily, 1 hour away from the closing bell. Actually, we are shy of 1 hour away, and stocks are kind of not doing too much. If you're the S&P 500, down 0.2%. We're going to have more from Charlie Pellet in just a minute, but we are in the midst of a very big week when it comes to earnings. So keep an eye on the big banks today and for the reaction. And of course, tomorrow, Emily Grafeo, and we're going to hear from Goldman Sachs, Morgan Stanley, and Bank of America.
I'm pretty excited considering the price action that we've seen this morning in the banks. Not every bank has done well, so it makes tomorrow morning kind of a mystery.
That voice you're hearing, it is not Carol Masser. It is a Bloomberg News cross-asset reporter, Emily Grafeo. She's in for Carol Masser today. I'm Tim Stenovec. We got a great program coming up over the next couple of hours, a story that you've been all over.
Oh, yes. I'm very excited to talk about the man from BlackRock who's now ushering in a quiet revolution at a different firm, Vanguard. That's today's big take. We'll talk about that in just a moment. Also, when you think of high-stress jobs, nurse, firefighter, doctor, pilot.
Yeah, those come to mind.
Tim Stenovec.
Yeah.
What about customs broker?
We're going to explain. It's in Bloomberg Business Week. Stacey Vanek Smith joining us on that a little later. Also a little later, just in about half hour or so, we're going to hear from Donald Trump Jr. He's coming into Bloomberg headquarters. That interview coming up in just a few minutes. All that and more over the next 2 hours right here on Bloomberg Business Week Daily. First up, though, a check of the day's trade and top business stories. Here he is, Charlie Pellet.
Thank you very much indeed. 53 minutes to go ahead of the closing bell. Dow Jones Industrial Average, low of the day right now, down 378, down 0.9%. We got the S&P lower, down 13, a drop of 0.2%. A lot of big tech names, though, hanging in there with NASDAQ up 84, NASDAQ up 0.4%. The NASDAQ 100 index up 69, now up 0.3%. And the Bloomberg Mag 7 index higher by 0.7%. Among those chip names, NVIDIA up 3.8%. Advanced Micro Devices up now by 5.6%. Relatively tame inflation data failing to ease Wall Street's worries about the impacts of tariffs. The 10-year 4.48%, the 2-year 3.95%, and on this CPI Tuesday, we've got the 30-year at 5.01%. Gold right now down 0.5%, 33.28 the ounce, and West Texas Intermediate crude oil down 0.5%, WTI 66.67 a barrel. Treasury Secretary Scott Bessent says the formal process has already begun to find a successor to Fed Chair Jay Powell. In an interview with Bloomberg Surveillance, Bessent said that process does not include firing Powell before his term expires in May.
He's not looking to fire Chair Powell, and as I've said, I'm not going to comment on future policy or future mistakes the Fed will make. I'll only comment on past mistakes. And look, they've had some big forecasting errors, and this may be one now.
And you can hear the full conversation with Treasury Secretary Bessent on the Bloomberg Surveillance podcast. Again, recapping, S&P down 12 now, down 0.2%. And for on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, thank you, Charlie. So Vanguard's iconoclastic founder, Jack Bogle, frequently used the phrase, stay the course, to urge people to invest for the long term and to not get distracted by the daily gyrations in the stock market. Staying the course was also the mindset that Bogle used to build the asset manager Vanguard into one of the largest fund firms in the world. But a new course now might be being chartered at the Malvern, Pennsylvania-based firm. The $10.5 trillion asset manager has a new CEO, and he's the former BlackRock CEO, Salim Ramji. He shocked investors last year when he became the first outsider to lead Vanguard. Today's big take is written by Lucia Giftapulu, Bloomberg News asset management reporter. She joins us now in the Bloomberg Interactive Brokers studio to talk about this big take. Maybe we could start with After speaking with him, what did you come to understand to be Ramji's vision of the Bogle way? What parts of Bogle's legacy seem to ring true the most with Salim Ramji?
I think he's pretty well embedded into the Vanguard mission, and himself probably wouldn't say that he's diverging from Bogle's ideas. So I think you probably would be infuriated if you heard anything like that. It's really surprising, I think, to everyone involved that he's managed to actually go there and be accepted by the rank and files and even people further up. And, you know, obviously some people further up might have had their inhibitions, but most of them have jumped on train Salim Ramji. And, you know, by having that, he's able to push through, I think, some other things like that partnership with Blackstone, private markets, not entirely what Bogle might have had in mind when you know, he wanted to make investing available to the people. They're saying they want to make it very cheap for everyone, and they might be able to do it. He's also kind of been hiring a lot from outside, which Vanguard says they've always done, but you know, everyone knows this has been a very cultish culture around the vision of the now dead founder. It's pretty incredible that some people have been there like for 30 years. And he's gone there and he's managed to charm everybody, which I think is quite the achievement when you talk about a culture as deeply ingrained, you know, in people's DNA as Vanguard.
I think what's so fascinating about this company is just where it's based. It's in Malvern, Pennsylvania. It's not on Wall Street, despite the fact that it is such a large asset manager, $10.5 trillion. And New York City, Wall Street would be the home of any firm you'd think that would have assets such as those. Are critics still saying that there's a concern that Vanguard is losing its way, that it's steering away from what Jack Bogle envisioned?
I'm not sure if this is what critics say. I think what they say and what the main issue is that in 1995, that company was $1 billion, so it could be run like that. So Vanguard is owned by the people who own the fund. So if you have a Vanguard fund, congratulations, you own a bit of Vanguard. Now this has exploded to 10.5 trillion, which is the last figure we know. It might be even bigger as we speak. And can it be run in the exact same way that it was when it was 500 billion, when it was 1 trillion? This is the only company that's like the second largest asset management company on planet Earth. So is it diverging from Bogle's way? I mean, at some point, if they keep cutting the fees, they will go to zero. And then where does the money come from to sustain this continuous growth? Because the growth is not stopping.
I want to talk a little bit about crypto and kind of the next frontier for the company. The company's CEO spoke to Katie Greifeld for Vanguard's 50th anniversary. This was on Wall Street Week back in May. Take a listen.
I could also see them asking for Bitcoin and crypto, which famously Vanguard isn't too hot on. So I wonder how you're thinking about those sort of potential run-ins.
Yeah, I think we've been very focused on what is it that clients need. And I think we've been very true to our own brand as to what can we do that is differentiated as Vanguard and can meet that need distinctively. And so there's a whole series of things around advice that clients are talking to us about and needing, particularly around retirement, and particularly now that they've saved and invested, often with Vanguard for the long term.
Salim Ramji, Vanguard's CEO, speaking with Katie Greifeld for Vanguard's 50th anniversary. That was on Wall Street Week back in May. Did crypto come up in your reporting at all? Because that seems kind of antithetical to Vanguard's DNA.
No, not that much, but he did tell me that if clients' needs change, we will change with them. So I think he's pretty open to bringing things that you know, clients will need. And a story I did 2 years ago, one of the execs there told me when I brought up crypto and some other things, he said, we don't give people what they want. We give them what we think they should have.
That's very Wayne Gretzky.
It is very, and also very Vanguard. I don't know if this is changing now. So I wouldn't be entirely surprised if they came up with some sort of crypto project or product.
Wow.
But they still, I think they still are true, to their beliefs, and when they say that they would do the best for the investors. If they think this is way too risky, they're probably not going to do it yet. But they're doing private markets now,
Right.
So I don't know what's going to happen in 2 years' time.
Right. Yeah. They teamed up with Blackstone to sell private market investments to individual investors.
And Wellington.
I'm wondering that private asset push, is that essential? Does Vanguard, regardless of what the investors need, does Vanguard need to push into that private market sleeve in order to continue to grow?
So I know from our reporting that they were getting requests about what are you doing with that from the advisors. That's one. Number two is when your average fees are 0.07 and you're growing by several hundred billion a year, you need the money to come from somewhere. And where is it going to come from? It's going to come from wealth, and it's probably going to come from private markets.
What about active?
Active, they have active funds.
How do they do, though? I mean, because Vanguard is known for passive.
Yeah.
How do the active funds do? There's a lot of competition there. That's a lot of competition with passive, too,
So
though.
where they outsource the management, obviously, Wellington does a lot of it. Bailey Gifford, there is a couple of other managers. If you look at the flows of Vanguard, excluding the passives, they're in outflows. So they're a private company, so we can't see the numbers. We don't know where the money's being made. It's like the vast majority of it is in passive investments, but they still have some active that some of the clients might want. It's still the last figures I checked from Morningstar. If you excluded the publicly available figures, if you excluded the passive, it was like tens of billions in outflows.
In just the last 20 seconds here, other people you spoke with, how are they evaluating Ramji's ability here to kind of respect the Vanguard legacy, but also move the company forward in just the last 20 seconds?
So many of the CEOs that know him personally and have an understanding of Vanguard, they think he's the only person that could take Vanguard forward without diluting what Vanguard calls, proudly its culture.
Thanks so much for joining us. It's today's big take. It's one of the most read stories on the Bloomberg terminal. A really great piece. Lucia Giftapulu, Bloomberg News asset management reporter, joining us here in the Bloomberg Interactive Brokers studio. Check it out on the Bloomberg terminal and, of course, also at Bloomberg.com. At Vanguard, the man from BlackRock ushering in a quiet revolution. Coming up next on Bloomberg Business Week Daily, we're going to talk the commercial specialty holding insurance business. We're doing that with the CEO of Axis Capital Holdings.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, they're both in the red. NASDAQ Composite Index, NASDAQ 100 Index, both pushing higher. Relatively tame inflation data this morning failed to ease Wall Street's worries about the impacts of tariffs. S&P 500 Index, and now it's 62.56. Briefly traded at 6,300, down 12 right now, down 0.2%. The Dow down 0.8%. NASDAQ up by 0.3%. 10-year 4.48% with a 2-year 3.95% and the 30-year 5.01%. Spot gold is trading lower by $15 the ounce, down 0.5%. West Texas Intermediate crude also down 0.5%, 66.68 a barrel. J.P. Morgan, Citibank, Wells Fargo behind us. So what will be the next corporate focus? Emily Bowersock is the CEO of Bowersock Capital Partners.
We're going to be watching companies that are more dependent on consumer demand very closely. And so McDonald's, Walmart, Amazon. We saw Lazy Boy come out in the last 24 hours with reduced guidance, partly because of the American consumer. So, you know, we will get some disappointments, but overall, I think we've got a fair amount of upward momentum here.
Emily Bowersock of Bowersock Capital Partners. The air taxi startup Joby Aviation plans to double aircraft output capacity at its main production site in California, only weeks after completing piloted test flights in Dubai. Joby surging now by 9.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thanks, Charlie. In this environment of political, economic, social, and technological change, the nature of risk is in a constant state of evolution, and the need for specialty solutions to protect against that risk has never been greater. Those are the words of Vince Tizzio, President and Chief Executive Officer of Axis Capital Holdings. It's a publicly traded company, about $7 billion in market cap, and they work with businesses to cover specialty lines of insurances. So think property, casualty, accident and health, but also insuring about cyber, marine, and terrorism-related risks. Vince Tizzio joins us right now in the Bloomberg Interactive Broker Studio. Thanks for joining us. How are you?
Thanks for having me. Nice to be with you.
So you guys pivoted away from catastrophe reinsurance a few years ago, and now you're more focused on these specialty risks. Just talk a little bit broadly about what the focus is now and the motivation behind that change in the business.
Sure. So Axis in 2022 announced, as you mentioned, leaving the reinsurance property cat market. We rededicated ourselves to the insurance specialty products, and you captured a number of the industries. Why did we do it? We felt we had a stronger value proposition to meet the needs of our clients globally in the provision of marine insurance, excess casualty, energy, to name a few industries that we have a keen focus, of course, cyber. And we have found the benefit of realizing being at the point of sale on the insurance side has proven to be more economically beneficial as well.
What's the biggest area of growth for you right now?
Well, our wholesale business is the largest segment of growth for us here in the United States. It's a rapidly growing channel of distribution and one where we have a keen knowledge base and expertise.
But if you think about it, not from the perspective of how you're selling it, but of what you're actually insuring, which is the area of growth.
Sure.
Like, are more and more companies calling you and saying, we need cyber
The construction
insurance?
industry utilizes wholesale distribution often as one keen focus. The entertainment industry, the hotel industry, transportation, clearly. And really, we're bringing unbundled, so they're individual products to that channel that cover their exposures in a tailored way, really to be as specific to the exposures that they're trying to assure themselves.
What is your exposure with a huge event? Let's say a catastrophic event that would actually affect multiple customers of yours. What's your financial exposure and how do you protect yourself?
Yeah, so in part, the question that Emily asked at the outset was one of the driving considerations. Our ability to be more certain in the degree or order of magnitude that we could economically handle on an event that crosses multiple customers, multiple industries at the same time. So we have a number of models that drive what tolerance of risk that we have. It's one of our most improved areas from the vantage point of our volatility, which is measured each quarter on a catastrophe ratio basis. And I think it's aided our TSR improvement over the last 2 years, which has been over 100%.
What kind of companies do you work with in terms of size? Is it typically larger companies? Is there like a certain market cap that you're working with?
Yeah, thank you. So we've broadened the spectrum of our customer segmentation. We'll handle transactional customers, say companies with receipts or turnover as little as $10 million to the biggest companies in the world. And it obviously differs by each of our business focuses. In the energy space, we handle the largest companies in the world. In our middle market space, we handle a number of transactional customers across a broad swath of products.
How does climate change affect your business?
Importantly, and it's a topic that we are speaking about regularly, but more specifically, it is a reminder of the provision of care that we bring to the commercial insured global marketplace.
But which part of the business does it hit more so? Marine?
Property, marine, and energy are the three areas where climate change has an impact. And never forget, for the public company customer, the duties of a director that assures their companies that they're buying enough limits, that the terms and conditions are tailored to meet their exposures to loss. So broadly, it affects a number of our businesses.
What about when it comes to cybersecurity? Just like these leaders of big businesses that you work with, your clients, how nervous are they about, in an age of AI, increasing use of, like, I get scared. I read news articles about AI and attacks, and I get nervous. What are business leaders saying?
It's a top 5 board conversation. It starts with the provision of care, the resilience of the company itself to make certain that they can protect themselves, the choice of the insurance company that they're partnering with. Remember, insurance companies that provide cyber insurance aren't only an asset that they can draw on when they have an event. It's the loss preventative services that strong specialty insurers like AXIS deliver to customers. It's the continual feedback of making certain that we're both staying aware of the different threats and the different forms of threat actors.
Can you just explain and kind of take a step back and explain the difference between, for people listening or watching right now, the difference between specialty lines versus standard U.S. commercial lines of insurance, and sort of where you're leaning into when it comes to, because correct me if I'm wrong, you're kind of moving away from the non-specialty lines, right?
No, we're doubling down, Tim. So specialty, please think of specialty as providing through a distribution channel. We're an intermediated business, an individual product. We're not a packaged product. We don't sell combination or standard lines per se. We sell individual products that cover defined exposure. So we underwrite and provide to the market property insurance, cyber insurance, all forms of marine insurance. And we work through an intermediated channel that is specialized. What does that mean? That's the line of business that they represent only on behalf of their clients. Does that make sense?
Yeah, that makes sense.
I want to talk about the flood insurance market. One of our colleagues from BI, Bloomberg Intelligence, noted to us that most U.S. insurers do not write flood insurance. What do you think about, this prospect of more private insurers getting into that market, and what is AXIS's appetite specifically?
Well, we, as part of our property offering, we do provide flood insurance. I think what was referenced in the article is really the public-private partnership. The order of magnitude that floods can create an economic harm may require a partnership between government and private. And so this is a long-standing policy that's been out there. But in the provision of AXIS serving its clients, we provide a fulsome remit of offering. We provide this globally on a property basis.
Vince, always good to see you.
Nice to see you.
Thanks for swinging by. Vince Tizio, he is the president and CEO of AXIS Capital Holdings. It's a $7 billion market cap company that works with businesses to cover specialty lines of insurance, property, casualty, accident, and health. Thanks so much for joining us, Vince. Always good to see you. Hey, just about a half hour away from the market close, we're seeing the S&P 500 down 0.2%, the Dow down 0.8%, the NASDAQ composite is higher right now by about 0.3%. Let's head on over to our Bloomberg TV colleagues, Romaine Bostic and Anne-Marie Herdern. They're sitting down with Donald Trump Jr., as well as Omid Malik, the founder of 1789 Capital. Let's listen in.
What do you think is driving that?
Well, I think it's an extension of our thesis that Don and I started, 5 years ago, which was using various mechanisms in finance to try to push back against overreach we saw in the private sector, mostly at the behest of ESG and DEI mandates. What's happened is, through those mandates, private companies that control a lot of the economy have starved certain industries of financing. You guys obviously know that that's happened in fossil fuels with some of the mandates we've seen with public companies, but it has also negatively impacted guns and ammunition. So we used a SPAC to take a company called Grab-A-Gun public in furtherance of the Second Amendment, and the people have overwhelmingly supported it. This is now, having just closed a few minutes ago, one of the most successful SPAC transactions in history. We received 0 redemptions from trust, meaning the company will receive from our team tomorrow, when we ring the bell, over $170 million in proceeds.
Wow, when this was first introduced, I read it was actually only just at $100 million. Obviously, this is politically controversial. You're talking about an online gun company being really direct access to the consumer. Are there safety concerns in this, Don?
No, I mean, that's the big misnomer. They say you're not getting a gun to your doorstep. You're still going through federal firearms license dealers, but we're also...
To go physically pick it up.
To go physically pick it up. That's where you run your background checks again, and they like to pretend there's not such a thing, but it actually is very real and it's very regulated. But this is the way that regular people are buying. Throughout the crime of the last few years that you've seen, women are now entering the gun market. The experience of going to your local gun shop, it may be fine for me. When I walk in, it's, hey, Don, how's it going? If you're a first-time gun buyer, if you're a female, if you're someone that's young, that's an uncomfortable experience in many cases. So Grab-A-Gun allows you to do that the way you'd buy everything else, like you would on Amazon if you're buying home decor or other goods. And so we're bringing the experience that they're shopping with everything else to the regular consumer, and it's been incredible. And so it's a company with real revenue. They're doing $100 million a year, real profit, and, you know, pretty kind of cool to take a gun company public on the New York Stock Exchange. That's not something that I imagine many people would have envisioned a while ago, but there has been that big pushback from a big portion of the country that says we weren't able to do these things. We were debanked, we were de-insured, we were de-everythinged for so long. So our whole thesis was to give a big portion of the country what they've been looking for and to free up and really democratize the capital markets.
And you've given them a slice of that. Of course, there's still going to be a lot of big institutions that will say, okay, we don't want to actually invest in a gun company of any form. And I know that the whole thesis behind 1789 and some of the other projects you two have been working on is designed to sort of provide an avenue for those areas outside of just firearms. What else are you looking at, Don?
Well, we've obviously mentioned some of the companies that were invested in, again, a contrarian approach, but something that, again, a vast majority of the country, or at least a solid portion of the country, really wants to engage in. We took another company public 2 years ago called Public Square, again, an online retailer for people to buy American-made goods and to support the countries that they love. That's sort of morphed also into now a payments processor, since so many of the transactions that you saw for, you know, conservative or right-leaning type of goods were basically debanked. I've had businesses that I've started actually get debanked by getting a letter, hey, by the way, there's no more money in your bank account. We have a cashier's check in the mail. We just don't want to do business with you. Not because we were doing anything else, but because we didn't go with the mandates of whatever it was of politically correct, policy at the time. And so many Americans felt left by the wayside that we said, hey, this is a pretty solid market. If we can cater to half the country, that whether it directly or they just know it's a potential, we're going to be left by the wayside, that's a solid business to be in.
Another company in the industry that kind of falls into that category is what we were seeing with Polymarket and some of these, prediction market firms. And of course, they just won a reprieve today, a couple of investigations that have now formally been dropped. You're an investor in that. Obviously, you have a connection to the Trump administration. I am curious as to whether you think we're going to see more progress in the prediction space, not only with Polymarket, but with Kalshi and some of these other things, to operate more freely in the way that those founders have articulated.
So yeah, let me answer that in kind of a way to also summarize our overall investment thesis. So he talked a lot about the response companies, this parallel economy. That's what we've been using our SPACs for. 1789's mandate is even broader than that. It will include some of that. We have, for example, invested in Substack, which is a free speech platform, protecting the First Amendment. But we also go into several other areas. One is areas that are going to enhance the security and prosperity of the United States. So think defense tech or the reindustrialization of the United States. The third is the area that we talked a little bit about, areas that have been underserved, fossil fuels, guns, that we see an arbitrage opportunity in. And then finally, where you're starting to pick up on with Polymarket, areas where I think the government or certain incumbents have failed miserably. That's the reason we got into BlinkRx, which reduces drug prices. It's an area of the market where the government has failed to reduce pricing, and we find this is a disruptor. SpaceX falls into that category as well. NASA failed, and SpaceX took the mandate. Polymarket falls into that, in that people lost faith with pollsters. they were constantly just paid off and hired mercenaries. And what Polymarket has shown is that you can basically take the markets to try to predict what the truth is. And because people are going to put their money behind what they really think, it's the same thing you see with using markets in finance in order to predict things. You can do that now with polling around politics and other issues as well. So the last thing I'd say about Polymarket is it also announced that from Founders Fund, they're going to have over $1 billion valuation, which we like because that marks up our investment 3 times.
Well, they've been accurate. They've been right.
Yeah.
Okay. I've been in politics, at least the game peripherally now, for a decade. And how many times? I mean, we saw it the week before the election. You know, Kamala Harris is going to win Iowa. It's like I don't know, man. I was in Iowa a couple days ago. I don't think that's going to actually happen. You know, they were able to get that. So they saw the way these markets and some of these traditional sort of political institutions have been able to be weaponized for the benefit of the establishment, and they've gone against it. They've proven to be right, and that's a solid investment.
Well, on that point, Don, and we certainly saw that in the presidential election. We also saw that at the local level here in New York with the kind of the surprise victory of Zohran Mamdani in the mayoral primary. And I know there are a lot of folks, particularly in finance and real estate, who are wringing their hands over the prospect of Mayor Mamdani. But I am curious as to what you think of not so much him, but about the sort of a groundswell of support that he got, particularly from a lot of young people in this city, and what they're asking for out of their mayor or potential mayor.
Listen, I think it's going to create a serious problem for New York. I don't remember what the exact stats are today, but I remember 8 years ago when I was getting ready to leave New York myself as a political refugee to the free state of Florida from the People's Republic here in New York City. You saw
it's not that bad.
It is if you were me. It is if you're me. You're dragged in front of every court and you're sued for all these. I'm the first person in the history of the world to get sued for paying back a loan on time with interest, just so we're clear. I get it, it's a little bit different, but I think at the time it was something like 18,000 people in New York City paid 84% of the tax. Those people are mobile. They can move wherever they want. So as a real estate holder in New York, I guess it sucks for me. As a real estate holder in Palm Beach, it's going to be incredible because those people are all going to move. They're very mobile. They've had enough. They understand what's going on, and they're not going to continue to subsidize the nonsense that hasn't changed anything. We've seen these promises before. It hasn't worked. It didn't work when they promised communism in Europe. It didn't work in the Soviet Union. Certainly hasn't worked anywhere else that it's been tried in the world. It's created more poverty than any institution imaginable. And it's sad to see literally the home of the free market, the home of capitalism, New York City, take this sharp turn to the left. And I don't think it's going to work out well. And I think people understand that. It's a little troubling watching Andrew Cuomo now try to come in as this sort of third-party candidate. And just so we're clear, like, we probably didn't get along that well for the last decade, but my first political fundraiser in history was for Andrew Cuomo because I was a real estate guy in this city. And he was the attorney general, so he signs off on your offering plan. So
Don,
I know him well, but
you're ringing
this is going to split a vote.
At the New York Stock Exchange. Why didn't you guys wait to maybe go to the new Texas Exchange, if that's how you feel about New York?
Well, because we're here now. I think that'll be a place that will take companies public in the future, but we're here now. And I think for us and for our thesis to be able to ring the bell of the New York Stock Exchange taking a gun company public is sort of an ultimate vindication in what we've been talking about all along. I mean, again, there's not a time in modern history where you would think that's going to actually happen. So, this is our thesis really, manifesting itself. Like, we're back, we're going to do these things, and we're going to fight for the freedoms that Americans love and deserve.
But politics is on a 4-year cycle.
Yeah.
How do you do that when you look at 2028? You're investing where you say conservative values, anti-ESG, you call it MAGA, Make America Grow Again. What do you think about, say, there's a changing of the guard in Washington in 4 years?
When did Fox News do the best?
I'm guessing
during Obama's 2 years, 2 terms. So we have an all-weather strategy. Either we're the loyal opposition, or like we are now, we've been vindicated culturally and politically with what we've been saying. Ultimately, I don't think this is partisan. I believe we represent the majority of the country, actually. And I think there was a period of time where it lost its way. And we were doing something that I think is actually totally capitalistic. We're simply providing people with choice. ESG's been around in earnest since 2010 and became a multi-trillion-dollar asset class. And at the same time, when you map out their returns, they fail to deliver. And that's just the facts. Why isn't there a fund out there like ours who's providing an alternative for people to invest in?
Fair point, but do you worry at all that your strategy, EIG or whatever you're calling it, ends up being the next ESG, where it's basically just sort of a niche instrument for a niche group of people and maybe it doesn't deliver?
I don't, because if you look at the principles of what that acronym stands for, entrepreneurship, innovation, and growth, it's everything Don was just lamenting about New York City, which is to say that this was the place that capitalism are supposed to be universal values. It's one of the things, if you have a country like America, is supposed to be our unifying ideology, is capitalism. And it does give me hope that tomorrow the New York Stock Exchange, which has been great, by the way, as a partner, is welcoming us to basically do a ticker under the letters PEW, Pew, tomorrow.
A little takeoff on pew pew, like shooting a gun, but it's also important. I think the last 4 years taught Americans a lot of things, right? They became unafraid to speak up about things that were obviously insane, things that went too far. You see that manifesting itself right now, in so many cultural issues. The trans women in ladies' sports, men playing in women's sports, people who were afraid to voice those opinions about how asinine a concept like that was just a few years ago these are 90-10 issues. We're taking the 90. So we're okay with that competition if it just means that everyone's actually thinking rationally. We're fine with that. If we're the catalyst for that change, we're good with that, because that's what's good for the country and that's what's good for America.
Speaking of voicing of opinion, you have a big stake in XAI.
Yeah.
Obviously, there's been some tension with the former First Buddy. Has that changed how you view that company, and even maybe more so in the financials? We've reported that they are burning through a tremendous amount of capital every single month. You still want to maintain that investment?
By the way, actually, yes, one of the worst publicly traded companies of all time was Twitter before Elon Musk took it over and made it profitable. So I'm long on Elon. Our fund is. We're invested in every one of his companies. We're invested in X, which was Twitter, XAI separately. Now they're merged, which is also a brilliant play, because the feedstock that these AI companies he now has in-house with a platform that has over 600 million users. It's genius. The competitors don't have that. We're also invested in Neuralink as well. So we think the Elon index, if you will, is something that's here to stay, and the companies are demonstrating their success independent of whatever personal issue may happen, which obviously he and I want to get resolved and move on in a positive fashion.
Do you have a personal relationship with Elon?
Of course.
Yeah, we do.
It's still healthy.
The reality is, hey, there's going to be political differences. The political world is different than the world in which you often function with. That creates a lot of other tensions. I mean, I love Elon as an innovator. I mean, he's got, without question, one of the top innovators of this century, perhaps ever. And so, him focusing on those things, I think, is very positive. So we've always been able to maintain that relationship. I think that comes back. Again, politics is a very different game. I learned that one the hard way 8 years ago. People create obstacles. They create headaches that aren't real. They aren't.
You are making it, because look, just a few months ago in February, SpaceX was valued at $350 billion. They just did an oversubscribed round for $400 billion a few months later. This is constantly happening in every single one of his portfolios. There's reports out there that XAI, which was at 50 or 60 billion less than a year ago, is going to be at 200 billion. So the private markets and markets generally are speaking, and they still love the portfolio.
When it comes to politics, though, it is in our financial markets now. Policy in Washington constantly drives what's going on. People are glued to Truth Social to understand what potential the next tariff rate is. Don, I want to get your sense, given the fact that you are the president's son. I asked your dad once about the Trump put, if it exists in the market. Is there a threshold he's unwilling to maintain when it comes to either whether it's tariff policy or something else because of what is going on in the financial markets? And he once talked about the bond market getting yippy. Do you think a Trump put exists?
I don't think so. I think the reality is he's one of the few people in politics who's willing to play the long game. We don't do that, right? We have very short-term cycles. People make bad decisions today to get a quick result tomorrow that is, disastrous, for us in 50 years down the line. He's the guy that's willing to say the things that need to be said today, who's willing to take some of that heat now to be able to have the end result that's beneficial for the country in the future. That's what he's done very consistently. You saw that even a couple of weeks ago. S&P's down 5. Oh my God, it's the Trump crash. Well, what happened when it hit all-time highs? Last Thursday? What happens when it recovered 10 days later after that? He gets credit for the negative, but he doesn't get credit for the positive. The reality is these things manifest themselves over time. We've become an instant gratification society. He's one of the few people that's actually a decision maker that is playing the long game and doing so for the benefit of the country.
You nod your head. I want to give you the last word, but I also just wanted you to just at least touch on some of the other two big political issues going on right now, the legislation on crypto and the potential freeing of Fannie and Freddie. Where does that stand?
Well, yeah, I'm on the board of Fannie Mae, and that was something that I wanted to be able to serve the country. I'm excited about making sure that those institutions stay in a great spot, and see how I can work with Commissioner Pulte, Secretary Besson, and Secretary Lutnick to improve upon them. And that's what my role is, given my experience as an attorney and capital markets professional and investor. That's why I did that. As far as crypto legislation, next week, we're excited about that. That's going to be another signature piece of legislation the president's going to pass right after the big, beautiful bill. And I think that's going to be something we needed and brings crypto out of the shadows as it was in the previous administration. And it's something, or another reason why the president had that industry support.
Crypto is going to be the future of finance.
Yeah.
Okay. We were doing everything imaginable in the prior administration to send that to other places. People want to be in America. They want to invest in America. They want that stability. What they needed is some guide rails. They needed a framework in which they could work, even for us in the crypto platforms that we were developing, whether it was American Bitcoin, whether it's World Liberty Financial. We didn't get into that because we knew all that much about crypto. We got into it out of necessity because we were getting debanked. There wasn't a person in this city that I couldn't call and get a loan for a real estate project a few short years ago. Then we became Politica, and all of a sudden you're persona non grata. So crypto's the future. To be able to have the legislation to create those guardrails, to be able to keep that industry, this is going to be a multi-trillion-dollar industry, and it should be based here in America. America should get the tax benefits of all of that. They should have the innovation, the growth. That's strategic thinking, and so I'm super excited about that bill because I think it's going to really make sure that America is the home of crypto and blockchain technology for the future.
All right.
Well, there you have it. That is Romaine Bostick and Anne-Marie Hordern just now speaking with Donald Trump Jr. He is, of course, the eldest son of the president, also a partner at 1789 Capital, as well as Omid Malik, the founder of 1789 Capital. We are just about 12 minutes away from the close of U.S. equity market trading. Charlie Pellet has been keeping an eye on everything happening right now in the markets. Hey there, Charlie.
Oh, hello there indeed. We got the S&P 500 index. CPI Tuesday, we're trading lower right now. S&P little changed after earlier topping 6,300. Right now, 62.55, down 13 points. Drop there of 0.2%. Dow Industrials down 371, down 0.8%. But a definite split in the market today. We've got NASDAQ and the NASDAQ 100 index both advancing. NASDAQ right now up 82 points, up 0.4%. NASDAQ 100 index up 0.3%, and the Bloomberg Mag 7 index up by 0.7%. That index includes Nvidia jumping by 4.1%. 10-year at 4.48%, the 30-year 5.01%. Gold down $14 the ounce, 33.29, and West Texas Intermediate crude down 0.5%, 66.68 a barrel. A lot of talk about crypto. Bitcoin down 3.2% right now. Bitcoin 116,384. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
The funky music will drive us till the dawn.
On Bloomberg Radio.
Well, TikTok, everybody. 10 minutes to go to the close of equity market trading today. Taking a look at how things are. Just got an update from Charlie Pellet. Worth repeating, the S&P 500 right now down about 0.2%. The NASDAQ is higher by 0.4%. The Dow down 0.8%. I want to bring in David George, senior research analyst at Baird. David joins us from Franklin, Tennessee. David, good to have you on with us. How are you?
Great. How are you? Good afternoon.
Good afternoon. Let's talk big picture here. We heard from the banks, 3 of the banks today. We'll hear from 3 more tomorrow. We're sort of at the beginning of earnings season. I think a lot of investors were expecting the last quarter to be pretty bumpy when it came to the outlook for tariffs. We didn't necessarily see that start to seep in. To what extent right now do you think the market is pricing in tariff risk?
You know, that's a great question. I think relatively low. I think that there's a lot of complacency, and this is more of a market comment from my perspective rather than the banks, but I think there's a lot of complacency around tariffs that the ultimate rates that are being discussed in some of these letters that have gone out over the last few days are going to be something on the order kind of in aggregate, Tim, around the 15% area. So we'll see, to use the president's term, we'll see what happens. But as it relates to bank earnings, it's not something that we've really seen have much of an impact. I think in the last couple of months, we've seen a pickup in loan demand. And I think part of that stems from anticipatory buying of inventory. So that has resulted in line of credit utilization picking up to some degree. So there's been some impact there, but we certainly haven't seen any of the negatives as it relates to potential impact on corporate profit margins and so forth. And that's something that will take, if it is indeed an issue, something that will take some time to occur.
Have we seen any positives? And what I mean by that is sometimes, when bank earnings roll around, you often hear people say that volatility is actually, market volatility is actually good for banks. The traders, pull in more revenue because they're just simply trading more. Did we see that in this current quarter, that all of the market volatility that had to do with tariffs, did it help banks at all?
Yeah, at the beginning of the quarter, it did, Emily. The volatility in currencies, commodities, and markets broadly throughout the month of April and in the beginning of May helped derivatives trading, equity trading during the beginning of the quarter. And then as volatility calmed down, we kind of saw the baton being handed off from vol-related activity to capital raising activity, M&A. So we saw a number of IPOs and secondary offerings throughout the tail end of the quarter, as well as a pickup in M&A. And the momentum of late seems to be more on that end rather than volatility-related activity.
I do want to make a note that the president is right now making comments at the Pennsylvania Energy and Innovation Summit in Pittsburgh. He made some comments about investments from tech companies. You can check out Live Go. He's attending the Pennsylvania Energy and Innovation event. You can watch and see his comments on Live Go.
David, I want to ask you specifically about earnings here from JP Morgan, because you downgraded JPM to an underperform. You said the risk reward is getting unattractive. Talk a little bit more about that stock rating, that stock call that you made.
Yeah, the stock call really is just a call on the stock itself. Many times the fundamentals of a company and the stock aren't necessarily one and the same, and I think that's true in this case. We have the utmost respect for JP Morgan. It's probably the best company that I cover. Fundamentally, I just believe that, and we believe that the market has priced it that way. JP Morgan trades at over 15 times earnings. It trades at close to 3 times tangible book. If you were to look on your Bloomberg terminal and run a historical valuation analysis on JP Morgan, it would suggest that it's never been more expensive. And the market is pricing in, we think, a permanent improvement in profitability relative to the rest of the industry. And banking to us is a commodity, and as great as JP Morgan is, we're of the view that the excess returns that they've been able to generate are going to be a little bit more normal going forward. And we simply think that the upside is fairly limited. So we're paid to have an opinion, and we think that investors should sell the stock.
Okay, well, let's talk a little bit about tomorrow and Bank of America. Sure. You upgraded Bank of America in April. What should investors be on the lookout for now, and why are you bullish on the company?
Yeah, so we actually downgraded B of A to neutral the same day we cut JP Morgan to a sell, but that stock was up over 30% in just that couple-month period of time. I think B of A's quarter tomorrow is going to be relatively good. I think expectations around that stock are not nearly as high as perhaps Wells Fargo today, as well as JP Morgan. So B of A should benefit from all of the things that we've talked about as it relates to volatility related activity in the capital markets. And then obviously Merrill Lynch benefits from asset prices being elevated. So we think Merrill's going to have a pretty good quarter, and the bank is performing well at the same time. And the stock has lagged peers, so we think expectations are low, and we feel okay about B of A going into tomorrow. I think that the numbers are going to be good.
We have an interview with Brian Moynihan tomorrow afternoon in the 2 o'clock hour, so I encourage everybody to check that out. David Weston will be doing that interview with Bank of America's Brian Moynihan. Okay, so you talked about JP Morgan, you talked a little bit about Bank of America. If you think about the broader group of banks, and the banks as a broader group, are you thinking that they're, I don't know, what are you thinking about in the context of this rate environment? Because nobody can really make sense of the rate environment right now. You hear one thing from the White House, you hear a completely different thing from the Federal Reserve. What's your view?
Yeah, I think the answer is somewhere in the middle, like most things in life. I think it's reasonable to expect that the tariff impact is likely to be, I'm reluctant to use the word transitory, but is likely to not have a longer term impact on inflation expectations. So I think it's reasonable to expect it, and the curve is pricing this in even after today, around 50 to 75 basis points of cuts by the end of calendar 2025. If the long end stays where it is, which we think it's going to be in that 425 to 450 range for the foreseeable future, that's actually a pretty good environment for banks. If you go back the last 3 or 4 years, we've had a very flat, if not inverted, yield curve for some time, and that has had a negative impact on the profitability of banks, particularly the regional banks. So to the extent we can get a sustained positive shaped curve, we think that's going to actually have pretty positive implications for most banks going forward.
David, thanks so much for chatting with us this afternoon, talking all things banks. We got to get you back on soon. David George is a senior research analyst over at Baird. Taking a look at how markets are set to close, just 3 minutes away from the closing bell, down 0.3% on the S&P 500, up 0.3%, whereas we're down 0.9% on the S&P 500. We did hear from J.P. Morgan, Wells Fargo. Who else did we hear from today? Citibank as well.
Citibank.
Tomorrow, we'll hear from Bank of America, Morgan Stanley, and Goldman Sachs. Be sure to tune in to Bloomberg Surveillance to hear all of those details tomorrow morning.
And we got macro data today, too.
We
Core
did.
CPI coming in.
CPI action.
Softer than expected. And yet we're seeing rates higher. We're seeing stocks lower. Traders kind of still digesting.
Is everyone on vacation?
Maybe.
Maybe that's what it is. Hey, coming up next, we're joined by our Bloomberg TV team for our cross-platform coverage on radio, TV, YouTube, and Bloomberg Originals. We're going to count you down to the close. The closing bell starts now.
Now.
And right now we are 2 minutes away from the end of the trading day. Romaine Bostic here with Scarlett Fu, taking you through to that closing bell with the global simulcast. It has started. Tim Stenovic is in the radio booth. Emily Grafeo by his side today. Carol Masser has the day off. Welcome to our audiences across all of our Bloomberg platforms, including our partnership with YouTube. Tim Stenovic, a mixed day in markets, down on the S&P 500 and slightly higher, though, on the NASDAQ.
Yeah, I mean, slightly higher on the NASDAQ, and I guess, like, I kind of was expecting to maybe talk about bank earnings or maybe the CPI data, but I think what is bigger for the indexes is what we heard from NVIDIA and AMD earlier today, and the government officials telling NVIDIA that they're greenlighting export licenses for the H20. That has shares of chip companies higher.
Speaking of what's moving today, Bitcoin is down 3%. Now, of course, this was after it hit a record high of 120K yesterday, but it is interesting to see not as much movement in the indexes, but crypto is really on the move today.
Especially after that House procedural vote on the crypto measures failed. And I mean, I'm not going to say that stocks are necessarily falling, but they definitely have drifted to the downside.
We should talk about the idea here, too, that just how lopsided the trade is. I'm glad you brought up the chip stocks, because when you look at the NASDAQ 100 and the fact that it's in the green, basically that's all NVIDIA, as well as some of the other chip makers like AMD and Broadcom. Without them, we'd be deep in the red. And it's a similar story for the S&P 500, NVIDIA, Broadcom, Microsoft, basically the biggest contributors to the upside for the S&P, but that's not enough to overcome the downdraft, Tim, that you're getting from Meta, Tesla, and names like that.
All right, we'll see what happens tomorrow with Bank of America, Goldman Sachs, and Morgan Stanley, and a host of other companies that are set to report this week, Romaine.
Absolutely. As we get the closing bells here in New York, I guess at some point we will actually see them here on this Tuesday afternoon. The Dow Jones Industrial Averages looks like it's going to close out the day lower by roughly about 1% on the day, down by more than 400 points, closing in right around that 44,000 level. The S&P down by about 25 points or 0.4%. The NASDAQ Composite higher, just by about 0.2%. But the big laggards, of course, were in that more cyclical space. Dow Transport's down 1.6%. S&P 400 mid-caps down 1.8%. And the Russell 2000, Tim, down an even 2% on the day.
Hey, you make a really good point, Romaine, about the massive stocks that were lower in the S&P 500. Kind of shocking to see this. Only 47 stocks in the S&P actually moved higher today. We had a whopping 455 move lower. Kind of speaks to the fact that some of the big names did move higher and kind of makes it a little lopsided for the day.
All right, and you can certainly see how lopsided it is when you look at the sector performances. That big chunk there is information technology, the biggest sector in the S&P 500, up 1.3% because of gains in chip companies. Everything else is lower. In fact, you've got 6 sectors finishing down at least 1%. The worst performers are materials, losing more than 2%. Healthcare and financials also down at least 1.5%.
All right, well, let's take a look at some gainers. Actually kind of easy for me to find them because I did start with chip stocks. NVIDIA shares finishing the day higher by 4%. The company said it received assurances from the Trump administration that sales of its H20 AI chip to China would be approved. This is a dramatic reversal by the White House. This move coming late yesterday, crossing on NVIDIA's blog. Late yesterday, U.S. government officials told NVIDIA they would greenlight export licenses for that H20 AI accelerator. This, according to the company, late yesterday. Shares moving higher by about 4% today. We also saw a move higher from AMD as well. Also, let's talk Citigroup. Look at this. Shares rising to the highest level going all the way back to 2008. A 3.6% higher on the day, 3.7% higher on the day. The bank said it would ramp up stock buybacks following a strong result in regulatory stress tests. Citigroup's traders also rode the tariff-induced volatility in markets to their best second quarter in 5 years. Revenue buoyed by record trading volumes in the quarter. Once again, Citi shares higher by 3.7%. And MP Materials shares surged today. You guys might remember we had the company's CEO, Jim Litinsky, on our air just late last week. Shares surging today by close to 20%, the highest intraday level going back to April 5th. Apple committed $500 million to buying the company's American-made rare earth magnets in a multi-year deal. Apple and MP Materials will establish rare earth recycling line in Mountain Pass, California, and develop a novel magnet materials and processing technology to enhance magnet performers. Yeah. It's part of Apple's pledge to spend more than $500 billion in the U.S. over the next 4 years. Shares of MP Materials higher by 20% today.
All right, let's get to some of the decliners. Wells Fargo was among the worst performing S&P 500 companies today. Fell about 5% to finish the day. After a miss on second quarter net interest income, it also lowered its full year guidance for NII after another quarter of tepid growth. So interesting here to see that divergence in the bank earnings right now.
All right, I just want to jump in because we did get earnings from Omnicom. It's not just the big banks that are reporting. This is the advertising agency. The company reporting second quarter revenue that met analyst estimates, $4.02 billion, just slightly above the consensus estimate of just under $4 billion. Second quarter adjusted EPS of $2.05. That does beat the consensus estimate of $1.98. The stock moving slightly higher in the after-hours trade by 2%.
All right, and back on those decliners, BlackRock, after hitting a record high here on Monday, is now down 5% and closed the day down about 5%. And it was headed for its worst earnings day drop in more than a decade after revenue and performance fees missed estimates in the latest earnings report. BlackRock, of course, is the world's largest asset manager, and total assets actually did hit a record $12.5 trillion as the company continues to grow into private markets. It grows its ETF business, particularly that crypto ETF lineup, really powering some of BlackRock's growth here. And yet traders just wasn't enough here to quell traders' concerns about that revenue miss, that stock falling. And then finally, Newmont dropping today following the resignation of the company's chief financial officer. This is one of the world's top gold producers, falling about 5.7% to finish the day. And they announced yesterday after the close, Carolyn Ovalman tendered her resignation last week, and the company didn't disclose a reason for that departure.
All right, let's take a quick look at yields. We did see a lot of activity there, a meaningful move higher, particularly on the longer end of the curve, something that's been playing out now for the last few weeks. Your 30-year yield now pinned at that 5% mark. And you're also seeing the 20-year yield also camped out there as well, further steepening along the curve with your 10-year yield, flirting with 4.5%, and your 2-year flirting with almost 4%. And of course, all of this tied, of course, to a repricing of expectations around the Fed after that big CPI report this morning that seemed to suggest, at least for right now, no rate cuts at least not to the largest extent that was priced into this market, are coming. Meanwhile, we go back to earnings and take a look at J.B. Hunt, the trucking company, moving higher in the after-hours trade. After reporting second quarter EPS, they came in a penny higher than street estimates, $1.31 on the bottom line, $2.93 billion in revenue on the top line. That was also a slight beat in dedicated revenue, also coming in higher than expectations at $846, which was rounded up to $847 million. That intermodal revenue number, a key metric there, in line with estimates at about $1.44 billion.
Okay, a quick break from earnings to talk a little bit about deficits in Europe and some European countries. Have you guys ever wondered how much a holiday actually costs a country?
I do.
Okay, well, it's a good thing you wondered that because we've got some answers. France is actually considering axing 2 public holidays. They're trying to do this in an attempt to tackle the deficit. If you canceled 2 holidays, remember they have 11 public holidays a year, which about the same as federal. It's about the same as federal holidays in the U.S. in most years, compared with 8 days off in England and Wales. So kind of equivalent to what we have here in the U.S.
Holidays or the actual day number of days?
What do you, sorry, say it again?
Because some of their holidays are like a week long.
No, this is just, these are just 11 public holidays. But there are, businesses are closed for a lot more than that.
Yeah.
If you've ever been there in August.
Yeah. Like, are they taking into account the 2-hour lunch break?
No.
The 8-week vacations
they're
that
not.
May's referring to?
They're not taking that into
August
account.
Just disappear
Okay, if you canceled 2 days, according to the Prime Minister, you could give a boost of several billion euros to the country. So,
wow.
I don't know.
What is that in francs?
It doesn't matter anymore. It's on the euro now.
Oh.
Okay?
No, I forgot.
Well, speaking of euros,
Brexit.
Brexit.
It has a good ring to it, Romaine. You should try to make that stick.
Sure.
Did it work out well for the UK?
It did not work out well for a couple other folks.
Yeah. Most of the exits have not totally worked out. All right, let's talk a little bit about other companies affected by the tariffs. Kerrygold Butter says that it's planning to slow down its U.S. investment because it needs more clarity on Trump's trade settlement with the European Union. And of course, if you ever bake and you use Kerrygold Butter, I mean, that's kind of the only way to go.
Hold on.
What?
Wait, you bake with this stuff?
Yes.
Oh, I just eat it straight out of the dish.
No, it's amazing when you bake with it. You kind of have to.
Oh, game changing. Now when we discovered this butter a couple of years ago, like everything in our home changed.
Yeah, that's why you got to bake with it.
Kerrygold, what is that, Plugra? Was that like, isn't that like Austrian or German? Yeah, all those European butters.
You know you're special if you come over to the Stenevec house and we take out the
Kerrygold.
Yeah. If we just break out the normal butter.
Household and they give me nothing.
If you just break out like the normal butter, like you're not special.
The Trader Joe's butter.
Yeah.
That's all I know.
Kerrygold is the good stuff.
All right.
Well, we'll keep that in mind.
Oh, it's time to... I thought we were talking about butter, guys. I'm sorry. That is going to do it for our cross-platform coverage of the market close. For all the latest butter news, you can check it out at Bloomberg.com and on the Bloomberg terminal. We'll see you again tomorrow, same time, same place.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenevec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And looking at the close right now, I'm here, Emily Griffeo here with Tim Stenevec. I'm filling in for Carol Masser. Taking a look just how the day ended. S&P 500 really taking a leg lower in the last, let's call it, hour of trading. It finished the day down 0.4%. It was pretty much flat for the entire day. Yields also moving a lot higher, which frankly I'm a bit confused on because the CPI inflation reading came in softer than expected, but it wasn't enough, I guess, for traders to kind of like ease those concerns that tariffs will eventually make their way into the inflation data.
Well, look, there's a lot for traders and investors to be thinking about right now. There's earnings that we're getting from the big banks that continues tomorrow. There's everything that you mentioned when it comes to trade and trade deals, and then there's everything happening when it comes to geopolitics, including the shifting rhetoric, or so it seems, around the president and his comments regarding Russia and Ukraine. And that's exactly why we wanted to talk to Nick Wadhams. He's National Security Team Leader for Bloomberg News. He joins us from our Washington, D.C. bureau. Nick, I want to get to this idea of there's a lot of confusion about what the White House questioned regarding certain types of weapons and whether or not Ukraine could use those weapons to strike Moscow. There was kind of this back and forth this morning. We're going to get to that in a minute. But can you kind of just tell us how you're characterizing the way the president is speaking about the war in Ukraine right now versus how he spoke about it on the campaign trail?
Right. I mean, there are a couple of things going on here. One is I think it's difficult to come to the conclusion that the president actually feels closer to or more warmly toward Volodymyr Zelensky, the leader of Ukraine, but is more growing increasingly impatient and frustrated with Vladimir Putin. So his rhetoric from the campaign and in the first several months of his administration was essentially, hey, I get Putin, I understand him. You may not like him, but he's a person I can do business with. Once we get in a room and sort of hash out the particulars, I'm going to be able to bring this thing to a close. And he's argued, it never should have started, and also that it's something that he could end very quickly. Of course, now what he's seen is that not only does Vladimir Putin not want to bring the war in Ukraine to a close, but he actually wants to step it up. So you've seen in the last couple of weeks, it stepped up drone and missile strikes on Ukraine, essentially, so President Trump believes, in defiance of his demand for a ceasefire. So you're seeing his patience wearing thin. The big question, of course, though, is pitching it forward. If Vladimir Putin doesn't do what he wants, he's put this 50-day deadline saying you need to do a ceasefire by then or you're going to face sanctions and tariffs. What's going to happen then? Because he's still not committing more funding to Ukraine for weapons. He's willing to sell the weapons, but he's not going to commit U.S. dollars. So the rhetoric is changing. Whether the actions will follow remains to be seen.
The president was asked specifically during this meeting with the press, just in the 1 o'clock hour Wall Street time today, about whose side is he on? Is he on Ukraine's side or is he on Russia's side? That's not word for word, but that was the gist of the question. We played the playback on Bloomberg a little earlier. And he said, I'm on humanity's side. I'm not on either side. And one thing that I think has remained consistent, Nick, and you can correct me if I'm wrong, but it has been the idea that the president really does not seem to relish in the idea of these two countries going after one another. And he seems to be running out of patience with Putin. In fact, he said he's been very disappointed with Putin.
Yeah. I mean, the interesting thing that what you're talking about, his comments there, what that says to me is, the Biden administration and many Republicans in Congress as well and Democrats really see this as a binary choice. You have the aggressor and you have the victim. And Volodymyr Zelensky is the victim and Ukraine is clearly in the right and Russia is in the wrong. The difference with Donald Trump is he's unwilling to essentially make that judgment. So you get the sense that his anger and impatience toward Putin, again, is this idea that Putin is not sort of falling in line with what he wants, but it reflects a sort of broader strategy toward the world that he articulated in a speech when he was in the Middle East a month or so ago, that, listen, we're not going to pick sides. Our focus is on economic development. This whole idea of the rules-based order of the U.S. as the shining city on a hill, we're not going to do that anymore. We're not going to lead with values. We're going to lead with interests. And that's what you're seeing here. He argues, listen, I really want to end this war. And he's said before, he wants to end the war as well because he wants to essentially integrate Russia back into the global economy, and that's not something that's going to happen when Russia is violating the sovereignty of its neighbors. So, it's definitely interests first, values second, if at all.
Hey, Nick, help us understand here. How much power Trump has, how much negotiating power he has in threatening these 100% Russia tariffs. It doesn't seem like we do much trade with Russia. Just help us understand just like how relevant that kind of threat is, and then what exactly does the secondary tariff kind of look like?
Well, I mean, this is the thing that a lot of the president's critics have said is essentially he's coming to the realization that Biden and others had understood for some time before. They're encouraged that he's getting there, but they're upset that it's taken him this long to get there, which is actually that when it comes to economic leverage, it doesn't look like the U.S. actually has that much leverage over Russia. Yes, the Russian economy has been severely weakened by crippling sanctions, by isolation from the global financial system, but Putin's hold on power is firmly entrenched. He has not been shaken in his hold on power at all, and he continues to be able to prosecute this war in Ukraine. So economic leverage may not be the thing he has. And when you talk to Russia, what we were getting out of Russia yesterday, the response to this threat of tariffs and secondary tariffs, those would target China, India, and Brazil chiefly, and the U.S. is in trade talks with China and India as well, and has a whole separate trade conversation happening with Brazil. So there's a skepticism that Trump's going to be willing to impose these 100% tariffs on China or India if that runs counter to his other policy priority of getting a trade deal with those two countries. So that's some of a lot of the questions. How do you resolve these conflicting strands of U.S. economic policy, and what's going to happen in the next 50 days? Will Trump stick to that threat? There's a lot of criticism or expectation that he won't.
Okay, so now let's move on to this idea of whether or not somebody asked about if Ukraine can strike Moscow. Our reporting shows that Donald Trump asked Volodymyr Zelensky whether Ukraine could strike Moscow. It's an inquiry that the White House says was merely a question, but one that came hours after he voiced frustration at Russian President Vladimir Putin's refusal to accept a ceasefire in the war. Explain the context here.
I mean, listen, we have been in this situation so many times before where we try to parse the president's words and the meaning behind what he said. The White House stated very clearly, yes, he did ask the question, but when you get to the question around motivation, the idea is when you hear that the report, the suggestion is that Trump is willing to entertain the possibility that Ukraine strike Moscow as a way of putting pressure on Vladimir Putin. Then the White House was very explicit. No, that is not what he meant. He was just sort of asking, like, oh, hey, do you guys have the ability to strike Moscow right now? On the flip side, you can imagine a scenario where even if President Trump has no desire for Ukraine to target Moscow, he doesn't mind if Vladimir Putin is a little unsettled by these reports because it helps put up the pressure and the idea, he likes to lean into this idea that he's unpredictable and his adversaries and even allies don't know what he's going to do next. So this sort of adds to a little bit of the chaos. But the White House is very much swatting down this idea that Trump has this desire or a potential willingness to let Ukraine strike Moscow.
Nick Wadhams, appreciate you joining us, National Security Team Leader for Bloomberg News. He joins us out of our Washington, D.C. bureau. You can follow Nick Wadhams on the platform formerly known as Twitter as well. Hey, coming up next, we're talking customs brokers.
It's 421 on Wall Street. We do check markets all day long here at Bloomberg. Stocks end of the day lower. This Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, see if your company qualifies at oracle.com/Bloomberg. S&P ended the day down 24 at 6243, a drop today of 0.4%. The Dow was down 1%, down 436 points, while NASDAQ had a gain of 0.2%. Relatively tame inflation data failed to ease Wall Street's worries about the impacts of tariffs. The 10-year 4.48%, the 2-year 3.94%, and the 30-year 5.01%. Gold fell 0.5%, 33.28 the ounce. West Texas Intermediate crude down 0.5%, 66.66 a barrel, and Bitcoin down 3.2% to 116,318. NVIDIA and Advanced Micro Devices plan to resume sales of some AI chips in China after securing Washington's assurances that such shipments will get approved. NVIDIA shares advanced 4% today, while Advanced Micro Devices was up by 6.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Well, he wanted to become an investment banker, but after arriving at the University of Pennsylvania's Wharton School in 2007, he realized he was lousy at accounting and detested Excel. So he settled on startups. He eventually found himself in the direct-to-consumer healthcare business. We're talking about Andrew Dudum, CEO of the telehealth company Hims & Hers, which for more than a year has been selling GLP-1s, America's most coveted weight loss drugs. I'm reading from a story in the forthcoming issue of Bloomberg Businessweek magazine. It's the August issue, but you can read the story now on Bloomberg.com and on the Bloomberg terminal. Madison Muller and Devin Leonard wrote the story. We've got Madison Muller with us right now. She's Bloomberg News health reporter, and she joins us here in the Bloomberg Interactive Brokers studio. I think a lot of people are familiar. Well, I would say there are two different types of people who are familiar, maybe three, with Hims & Hers. There's the investing audience who followed the ups and downs, the roller coaster of this stock. There are the folks who are customers, perhaps, of the company. And then maybe there are the folks who are looking at the GLP-1s and looking for alternative ways to find this medicine. How did he get on your radar?
Yeah, so I mean, Hims, we've known about the company for a while because of their very splashy advertisements, which I feel like a lot of people have seen. I mean,
so it's not just us in the subways?
Right.
Like, it's not just New Yorkers?
Not just New Yorkers in the subway. I mean, sure, I talk about weight loss drugs a lot, so I do think I get targeted ads, but like most people I talk to have seen a Hims & Hers ad on Instagram or on Hulu. They advertise a lot. So people are familiar with the brand. They had this huge Super Bowl ad back in February about their weight loss drugs. And so it's been on people's radars, but I would say that the last year after Hims launched a compounded or copycat GLP-1 drug for a fraction of the price of what the companies Novo Nordisk and Eli Lilly sell their drugs for, it really put them on the map. I mean, their stock rose a ton in that time. They've experienced enormous growth. They're now worth $11 billion as of the last time I checked. And that is like really what got people talking about them the last year. They are sort of unafraid to be really loud and vocal in their marketing, sort of push the boundaries a little bit. They want people to be talking about their advertisements, be talking about what the company's doing. So that sort of like catapulted them, I think, into the conversation and obviously got them on my radar when they started offering these GLP-1 drugs.
How did they actually manage to offer drugs in such a competitive landscape? Would you say now that they're a direct competitor to these giant pharmaceutical companies that are also in on the GLP-1 space?
Yeah, no, that's a really good question because these telehealth companies, we did see pharmaceutical giants like Eli Lilly and Novo Nordisk start to see some of these telehealth companies like Hims as competitors because they were offering their drugs at a lower price point when Lilly and Novo were struggling with shortages and patients couldn't get the companies' branded drugs. And then we saw these telehealth companies crop up offering copycat versions that were allowed during the shortages and really like start to steal market share from them. And then we saw Novo and Lilly, a few months ago start partnering with these companies and actually utilizing the platforms and the customer bases that they've built to get their drugs out there to more patients.
Wait, a partnership, but then at least the Novo Nordisk partnership with Hims, that kind of exploded.
Yeah,
What happened?
there's been so many twists and turns and ups and downs with this saga over the last few months. I mean, it was a surprise, I think, to a lot of people that Novo Nordisk, huge pharmaceutical company, would choose to partner with a telehealth company that was selling essentially copycat or knockoff versions of their brand name drugs for a fraction of the price alongside the real ones. And so it was sort of a surprise back then, but the Hims CEO was saying that the two companies were really culturally aligned and promising, that he saw a future for them even beyond weight loss. And then, less than 2 months after this partnership was announced, we saw Novo Nordisk terminate the deal, sort of accuse Hims of some sketchy behavior. And since then, there's just been this public back and forth between the two companies sort of playing out on social media and playing out in, the media, giving interviews to different outlets and sort of like going back and forth, accusing each other of different things. So it's like a really unique situation where we have these two companies duking it out like in a very public way.
You reported on this for months. You've said that you've been working on the story for a long time and spent quite a bit of time with Andrew Dudum, the founder of Hims. I'm wondering if you could talk a little bit just about kind of his style as a leader, as a founder, his background, and how that's helping Hims become like a legit competitor in this very high stakes weight loss drug race.
Yeah. I mean, so Hims, even though it's been around for a few years, I mean, the company started in 2017, went public in 2021, and Andrew's very young. He hasn't really stepped away from this like founder CEO role. He's still, very involved in sort of the day-to-day. He's the one that's coming up with new ideas for the company to pursue, bringing them up in, board meetings, things, and like he is the one driving the company. And sometimes, we see CEOs like step back a little bit at this point, but he has 3 kids, 3 little kids. He's still very, very involved. His vision is sort of where the company goes. And he has this interesting background as well, going to Wharton, where it was sort of like a breeding ground for a lot of direct-to-consumer companies. And he wasn't at
like
school.
Warby Parker.
Yes,
they
Harry's
went there.
Razors, I think, too. Like, there's a few examples that we name in the story, and I don't think Andrew was at school with them, but we sort of see this type of company emerging from Wharton, which is interesting. And Andrew was involved in a lot of different startups. He was at a startup incubator before, going into Hims full time. So he has experience with launching companies, sort of knows what it takes to do that.
You've been in the weight loss beat for 2 years now? It's like what you live and breathe, essentially, when it comes to your reporting. And I think it's fair to say, based on what you've told us, this is more than a fad. It's more than just a trend. But it also is a huge money-making opportunity for a lot of different companies.
Yeah.
That said, this stuff changes very quickly. A company like Hims & Hers, as you detail in the piece, has pivoted over its history. What does it do now that is sort of on the outs with Novo? There isn't the shortage anymore, so they're not really allowed to compound anymore, right?
Well, so that's actually what they're betting on, is sort of that they will be able to keep compounding even though the shortage is over.
Why will they be able to do that?
So there is this, we'll call it a loophole. There's some argument over whether or not it's actually a loophole in the FDA legislation that says that these compounding pharmacies can continue to tailor make or personalize, customize these drugs for patients who can't take the versions that are commercially available from pharmaceutical companies. So essentially what Hims is doing is they're tweaking the dosages, the strengths of the drugs, and giving patients lower dose version, or titrating, stepping up the amount of drug that they're giving patients more slowly, sort of to mitigate the side effects that are quite common with these drugs, like nausea, vomiting. And so they're saying that, these patients are not they're not able to take the commercially available drugs because they have these side effects. And so they need these personalized versions. And by doing that, they're technically allowed to continue compounding. But the FDA hasn't really stepped in and ruled or said much about this yet. So, and we have a new FDA, commissioner now. So we're kind of waiting to see what happens.
Can you talk a little bit about how he's ingratiated himself and the company with the Trump administration and with RFK specifically?
Yeah, so Hims donated $1 million to Trump's inauguration fund back in January. And since then has been making, sort of broad appeals to the Trump administration, to RFK, to Marty Makary, who's the new FDA commissioner. Their Super Bowl ad was very much in line with some of the chief complaints that the MAHA movement has about the healthcare system being broken and pharmaceutical companies' incentives. And they've really tried to align themselves in some ways with RFK and with MAHA. But there's a fundamental difference in that MAHA really believes that, food and diet and exercise are sort of the ways should be the primary thing in the healthcare system that people are, promoting over pharmaceutical interventions, drugs. And, that's what Hims does, is they sell drugs. So at the end of the day, there's a little bit of a disconnect, I think.
I don't want to spoil the whole story because I definitely want our listeners to go pick up a copy of Bloomberg Businessweek magazine and read your article. But you do start with this anecdote of the CEO creating this donut, this very extravagant donut shop. And I just have to ask, is this like a dentist opening up a candy store? Like, why does he have this donut shop? Or is he just an entrepreneur?
I mean, he's just an entrepreneur, and this is like him and his wife wanted to create a space where their family and friends could come, where, in their community. It's like pretty close to where they live. And it's sort of a tribute to Andrew's grandparents as well, who were local. His grandfather was a local business owner in San Francisco as well. And so this was like sort of a passion project for them. But it is, if anyone's in San Francisco, they do have good donuts. They have very decadent donuts, so it's worth checking out.
You eat your donut and then you take your weight loss drug.
That's America for you.
Honestly, Elon Musk has posted about this.
Oh, really?
Yeah, he's posted about like eating donuts and GLP-1. So you're not far off, Emily.
Okay, all right.
People do it.
Wow, maybe I'm just like Elon Musk.
Check out this story. Check out this story on the Bloomberg terminal and at Bloomberg.com. It's also in the upcoming new issue of Bloomberg Businessweek magazine. It's the August issue. Be sure to pick up a copy of that one when you see it at the newsstands. Madison Mueller, she is the person who covers all things GLP-1. She's Bloomberg News health reporter, joining us here in the Bloomberg Interactive Brokers studio. Taking a look at stocks and how they ended the day. The S&P 500 down 0.4%. The Dow fell a percentage point. That was 436 points. The NASDAQ finished higher by close to 0.2%, pushed up by chip stocks, NVIDIA and AMD. Coming up next, we are talking the stressful job of being a customs broker. Stacey Vanek Smith next.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. It was a down day for the S&P 500 index, down day for the Dow Industrials, up day for NASDAQ and the NASDAQ 100 index. S&P 500 wiped out a rally as September Fed bets wane. The S&P was down 24 to 62.43, did touch 6,300 briefly early in the day, down 0.4%. The Dow down 436, down 1%. NASDAQ up by 0.2%. NASDAQ 100 index up by 0.1%. 10-year 4.48%, the 2-year 3.95%, and the 30-year 5.01%. Gold down 0.5%, 33.27 the ounce. West Texas Intermediate crude down 0.4, 66.73 a barrel. And Bitcoin today declined 3.1%. Bitcoin back with a $116,000 handle. As for tariffs and market sentiment, David George is senior research analyst at Robert W. Baird, and he was a guest right here on Bloomberg Business Week Daily.
I think there's a lot of complacency around tariffs that the ultimate rates that are being discussed in some of these letters that have gone out over the last few days are going to be something on the order kind of in aggregate around the 15% area. So we'll see, to use the president's term, we'll see what happens.
David George, senior research analyst at Baird, interviewed on Bloomberg Business Week Daily. After earnings, JP Chase down 0.7% today. Investment bankers at JPM eked out a surprise gain in the second quarter. Wells Fargo lowered its full-year guidance for net interest income. That stock today down 5.5%. Also, we saw Citigroup shares rally today. Citigroup up by 3.7%. Citi back at $90.72. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thanks so much for that update, Charlie. Do appreciate it. Well, being a customs broker used to be a pretty straightforward, low-drama gig, at least according to Jonathan Lieberman, president of New York Customs Brokers. It specializes in seafood. Maybe there was the occasional emergency, such as the shipping container of crocodile meat that he had to send back to Australia because of insufficient paperwork. But most nights, he could make it home in time for dinner with his wife and 2 young children. After so-called Liberation Day, everything changed, so writes Stacey Vanek Smith for Bloomberg Business Week. Stacey's the co-host of Bloomberg podcast, Everybody's Business. Check it out, new episodes every Friday. Stacey joins us from New York. Stacey, I want to start with just what exactly a customs broker does.
That is a great question. Before I started the story, I didn't know myself. A customs broker is kind of a facilitator. They kind of help to guide products into the country from overseas. They take care of the paperwork. They know about regulations. In the case of New York customs brokers, like you were saying, they specialize in seafood. There are all kinds of sustainability laws, NOAA, FDA regulations to navigate, as well as tariffs. So they kind of help facilitate all of that.
So everything was kind of fine and normal until April 2nd. Then what happened? What did he start to hear from customers?
Well, it was so interesting. So I guess normally, we've had almost no tariffs, a lot of free trade mostly for decades and decades. And so it was a pretty straightforward job. But all of a sudden with Liberation Day, all these different tariffs for all these different countries. And, seafood comes from all over the world. So he's been dealing with dozens and dozens of countries and dozens of places all over the U.S. importing these fish. And, he said all of a sudden everyone was calling, wondering, well, if I get the fish from here, but they're filleted here, what does that mean? I mean, people were just panicked because the margins are not huge for seafood. And so, a lot of times, like something like shrimp, there was a big box of shrimp in his office when I came that day, a big box of frozen shrimp in his office. Something like shrimp, a 10% tariff can completely wipe out the profit. So they were really panicked and just wondering what the rules even were.
How has it changed his job itself? As Tim mentioned at the top of the show, he used to be able to just make it home in time for dinner, but now he seems to be spending a lot more time at work. Really, how has this specific role just gotten so much more stressful and more difficult post-Liberation Day?
Well, for a couple of different reasons. So initially, you know, it was just a lot of paperwork, kind of keeping track of shipping containers, occasionally going out to his office is right by JFK Airport, occasionally going out to the airport and sort of checking on a shipment. Now it's just much different because he's got people calling him at all hours asking about rules. Also, the Customs and Protection Bureau is just issuing all of these new directives and rules all the time, like multiple times a week now. Apparently that almost never used to happen. So he is trying to communicate the rules changes to customers. And also there's just a lot of confusion over when the tariffs actually hit, how much they are. So he's getting calls, and these are very high stakes deals for a shipping container full of like lobster tails. That can be almost $1 million worth of lobster tails, in which case a 10% tariffs, you know, like $100,000. This is just so much money for these companies. Oftentimes they don't know how to find it, how much time they have. Things, I mean, they used to actually pay the customs brokers, they used to actually just cover the tariffs for their customers because they were so tiny. And now, you know, the tariffs can be upwards of $100,000. So he's helping them to calculate that. He's answering all of these calls. There's a lot of confusion over when the rules will change. So he's answering that. And then just the paperwork itself is a lot more complicated. He has to make sure that he's getting this right. There's not a lot of time to waste when you've got seafood sitting there waiting to be shipped. So he's trying to keep his clients updated on the rules. He's trying to answer a bunch of questions like late into the night, and also just keep the shipments moving as much as possible.
We've heard from the president repeatedly that the countries themselves are paying these tariffs. Based on your reporting, did you find that to be true?
That is not true. So the importer of record pays the tariff. Now, in some cases, the overseas companies will also be the importers of record. Sometimes they will do that. So sometimes that is actually true, but it is always the importer of record who pays the tariff. So if you've got, you know, a seafood restaurant importing a lot of seafood, they are paying the tariffs.
Did you get a sense at all in your reporting about just when the uncertainty is going to ease? Of course, we had the initial deadline. Now we have this August 1st deadline of when all these deals, you know, need to be completed. But from your seat, does it seem like that initial like tariff Liberation Day induced shock that kind of spread across markets and economies, has that cooled off?
No, this was, I think, the most striking part of my reporting is just there is so much uncertainty and uncertainty about the uncertainty, I would say. I mean, I spoke with one of the companies that works with Jonathan Lieberman, who uses him as their customs broker. It's one of the biggest, it's called Sensi is the company. It's one of the biggest seafood importers in the country. The owner, one of the presidents of the company said to me, you know, he's like, how do you run a business if you don't know what the costs are going to be? He's like, I don't know what they're going to change, when they're going to change. He was stopping shipments. He had stopped a lot of the shipments from China just because there was so much uncertainty around that situation. The costs were potentially so high. There's so much uncertainty, and there's not even certainty about when we will have certainty. And I think it's just making it so hard for businesses to plan anything.
So enter the magic 8 ball. This is not a joke. There's a magic 8 ball in your story.
This was one of my favorite. Every once in a while when you're a reporter, something happens that feels a little magical. But I went into Jonathan Lieberman's office. Like I said, it's right by JFK. And he had all the stuff you'd expect. Huge customs book. It's 1.5 feet thick of like every different possible product. Files, computer. And then there was a magic 8 ball on his desk. And of course, I asked about that. I assumed it was from his children or something, but no, he bought it right after Liberation Day. He was taking calls after calls from clients he'd had for decades. Just, they were all panicked, wondering what was going on. And he said he kept saying over and over, I wish I had a crystal ball. I wish I had a crystal ball. And he said while he was talking, he just impulse ordered a magic 8 ball off of Amazon.
I wonder
so now he says something, he just shakes it up to see, you know, to answer questions. And it, you know, when I was there, he shook it and it said Outlook hazy, which seemed appropriate.
This magic 8 ball likely was not made in the U.S. and probably would be subject to import.
It was in fact made in China.
It was?
Yes.
Okay.
He looked it up.
Well, there you go. Ever the amazing reporter, Stacey Vanek Smith, writing for Bloomberg Business Week. You can check out her story now on the Bloomberg terminal. It's about customs brokers. It was a low-stress job, not so in the age of tariffs. Also, check out Stacey's podcast, co-hosted with Max Chafkin, Everybody's Business. New episodes come out every Friday. It's Bloomberg Business Week Daily. Stocks on the move next.
You're listening to Bloomberg Business Week Daily with Carol Massar and Tim Stenovec on Bloomberg Radio.
It is Bloomberg Business Week Daily. That is Emily Grafeo. She's Bloomberg News cross-asset reporter. She covers it all if it's cross-asset.
Yeah.
Mostly ETFs, though, right?
Yeah, mostly ETFs. But, you know, you can put like every asset in an ETF. So it makes sense.
Including single stocks.
Exactly.
Just a plug for the big story that you had yesterday with Vildana Heinrich.
Yes, that was our big take. Single stock leveraged ETFs. It's a $22 billion space. And most of it is dominated by startup issuers, people working from home, seemingly, you know, heralding a lot of money and a lot of risk.
We talked about it yesterday, but one question I didn't get to ask was about Discord and the importance of Discord to the folks who are in one of the shops that are really releasing a lot of these. He's got like over $4 billion in assets?
Yeah. So Matthew Tuttle, one thing Vildana and I noticed when we went to his home office in Connecticut was that he didn't only have like the Bloomberg and news feeds on his trading screens in the trading software, but he also had Discord, and that's an online chat platform. It's a messaging platform. It's really popular with retail traders. It's kind of like Reddit Wall Street Bets, but it's a chat room, and that's where they go on and they talk about what stocks are hot and what they want to buy. And Matt's whole shtick is like he wants to create products that retail wants to buy. So if they love a certain stock, he wants to be able to create a product that offers leverage on the stock. So he monitors Discord constantly.
Do you know there's an Odd Lots Discord too?
Yes, I did. And actually an editor, this is funny, like an editor wanted to, he said, oh, isn't it Discord kind of controversial? And I was like, no, it's like we have an Odd Lots Discord. I think maybe it had a reputation for activity that maybe was more controversial, but it's pretty popular now.
I've only used it a couple times, but in the meantime, definitely check out Vildana's story and Emily's story on the Bloomberg terminal. Yesterday is a big take. I am Tim Stanovic, along with Emily Grafeo, Bloomberg News cross-asset reporter. We're joined by Bloomberg News equities reporter Natalia Konijevic for some stocks on the move. What'd you find today?
Guys, today I have 3 gainers again, so no decliners from me.
That's pretty amazing on a day where most stocks were lower.
Exactly, but we have some good single stock stories. So first of all, of course, it's a big day for bank earnings. I wanted to highlight Citigroup. The ticker is C. Shares rose to the highest level since 2008. That was the best quarter for Citi traders in 5 years. We know that revenue from banks' fixed income and trading business increased by 20%. The bank also said that it would ramp up stock buybacks after this successfully passing a regulatory stress test. The company plans to repurchase at least $4 billion of shares this quarter. This is more than $3.75 billion the firm bought during this entire half of this year, right? And we also know that it plans to boost dividends by 60 cents. And one other piece of news I found pretty exciting, that Citigroup also said that it's considering issue its own stable coin, which could position this firm as one of these early adopters across banks.
You know, it's funny, I asked Nathan Dean about this on Bloomberg Crypto today, and he said that not surprised that like the big banks are getting into this, and he would expect every bank to start at least consider this.
Yeah, it's. I feel like it's one of those things where like Citi's going to say it, and then Jamie Dimon's going to have to come out, and he's going to have to do his own.
That would be the day for Jamie Dimon.
Yeah, but that really piqued my interest. We don't have a ton of details, right, about like what that plan would look like, but it's certainly something to follow.
All right, what else is on your radar?
NVIDIA, I think everyone knows the ticker, NVDA. The stock has reached the highest level ever. Of course, on the news that the company plans to resume sales of some of its chips to China. We know that basically it could potentially add billions of dollars to NVIDIA's revenue. CEO Jensen Huang, he already met with President Donald Trump last week. Now he's in Beijing. He's attending some government-sponsored conferences, and he also was on Chinese TV, and he said, yes, the company secured an approval to begin shipping, and Bloomberg Intelligence is saying that it reopens a key sales channel for the U.S. chip makers. So there is more upside.
It's already a almost $4.2 trillion company after surpassing $4 trillion in market cap just last week.
Yeah, it's like kind of incredible to think about, like, did they even need this? Obviously, Wong said that they needed that market, but they were doing pretty well even without it. Okay, finally, MP Materials.
MP Materials, the ticker is MP. This is a rare earth producer. The stock hit is up by 20% today, and here we have this report from Fox Business citing people familiar with the matter that the company is planning to supply its products to Apple. They will establish the so-called recycling line in California. And this is also one of Apple's pledge to spend more than $500 billion in the US. When I just Googled, I think we'll have to learn more about rare earth materials. When I just did my research, I found it's not just about the name that they are rare. It's just like about crucial components that are used in electronics and stuff like that.
And the processing too, which China controls definitely controls the majority of processing. And it's become this bargaining chip with trade negotiations. And I think it's come into sharp relief that the U.S. needs to figure out how to decrease its reliance on Chinese rare earths. So this is one way, looks like they could do that.
Looks like that. Yes, guys. So these are 3 of my